What up, everybody? Welcome, welcome. All right. I want to give everybody in the house the right welcome that you need. Janudo, what's going on? Hi, Santos in the house. Splinkert from Brussels, what's going on, brother? How you doing? My dad lived in Brussels for 10 years, man. It's a beautiful place. It's a great spot. We have a great crowd here today for you guys. We have Chief Market Strategist Matt Maylie. He's a Chief Market Strategist at Miller Tabak. That's a private equity firm. He's been there for 14 years. Prior to that, Director of Trading at Merrill Lynch, where he managed the two biggest accounts, Fidelity and BlackRock. So Matt's been around. He was a Director of Trading there for about 10, 11 years. Before Merrill Lynch, he was trading at Salomon Brothers. That was the biggest firm on Wall Street in the late 70s, early 80s. So old school Matt's going to be here with us today with a mix of new school. We're going to talk about the current market, trade ideas, setups, education, strategies, how to make 3 simple ways on how to profit during a bear market, and a lot of other things that people are looking at, the professionals, of course, the money managers, of course, that they're looking at, right? So Matt gives us the insight on everything that we're going to be looking at forward today. So my words here are going to be, please pay attention. Make sure you're focusing. We have a lot to cover. We're going to go through tickers at the end. So if you do want us to possibly go over your ticker, make sure that you stick around till the end, because that's when we're going to go over tickers from the chat. And any other questions, put it in the chat. We're going to have a great session here for you today. We're going to start in 8 minutes. Mark it on your calendar, 5 p.m. Eastern, with Matt Maylie, lead trader at the Stock Picks Inner Circle chat room. So Wilson from the YouTube chat, thanks for having me and other traders here. Matt Maylie talk. Yeah, well, good to have you here, Wilson. Glad you're able to join us. We have again, we have an amazing crowd here, great community. Some of the people we have here are actual students, members from the Stock Picks Inner Circle chat room. So welcome to all you guys. But let's go ahead and get things going. 7 minutes, guys. Make sure you're tuned in, paying attention, pen and paper, listening to Matt, and obviously asking questions about what we're discussing and that sort of stuff. So we'll see you here, guys, in about 7 minutes. What's up? What's up, everybody? Welcome to the session. Guasa, what's going on? Janudo in the house. Okay, good to see you. Raj, afternoon, my friend from Phoenix. How we doing? Everybody, my name's Rodrigo. Nice to meet you. Hi, Lucy. Nice to meet you too. Just wanted to introduce myself really quick. We're going to be here today with Matt Maylie, Chief Market Strategist and at Miller Tabak, a private equity firm. A lot of you guys have seen Matt at CNBC or CNBC Asia or Bloomberg TV, but Matt has a live trading room here with Benzinga, and some of the members are here. So shout out to all you guys. And that's where Matt was. A lot of you guys were asking me, where's Matt? Well, that's where he is Monday to Friday, 9 to 5, live trading, giving entries and exits. And a couple shout outs here. Day Trader MMX, what's going on? Aloda, what's going on? Itzfa, Highs, Santos, what's going on? Acid Kid, Ace Kid, what's going on from Beantown? So let's see, who else do we have here? Ray, Skazi Blue, MB Fish. All right, we got a good crowd here, guys. We got a good crowd. But let me know in the chat when you guys are ready to start. So on the Zoom chat and on the YouTube chat, let me know when you guys are good to go. Give me a ready when you are good to go. Asif, good to see you. Good to see you again. There's a lot of familiar faces here. And yeah, so today, guys, we're going to go over trade ideas with Matt Maylie, education, setups, options, buys and sells, right? And market outlooks, a whole lot of stuff here that we have covered for you guys. And we're going to go over some trades that we made in the Stock Picks Inner Circle chat room that Matt is pretty much the lead trader at. All right, people seem like they're ready and pumped. Without further ado, guys, let's go ahead and bring on Matt Maylie. Let's go ahead and bring him in here.
What's going on, Rodrigo? How are you, bud?
Hey, Mr. Matt, how you doing, sir?
Good, good. Another crazy day in the markets today. So it was a profitable day for us in the chat room, which was good. And we took advantage of this decline. And that's kind of one of the biggest things that's going on right now, is that because of the changes in the markets in the last decade, but really in the last couple of years, the individual trader now has the tools to take advantage of volatility and take advantage of big moves in both directions. And that's what which is really kind of leveled the playing field for a lot of people, where if we're headed for a bear market, or even if it's just a deep correction, we've already seen some, I think, Jamie Dimon, the CEO of JP Morgan, probably the most powerful businessman in the world, this week said that he looks for volatility to continue. And so I'm really excited that we'll be able to take advantage of it in both directions going forward. So a good day today, and I think many more going forward.
Yeah, I'm not surprised that you're doing well on these. You've been loaded with puts for months now, and you've been doing well in the chat room, to be honest. And that's the thing. A lot of traders really kind of got caught off guard, and the thing is that you are able, well, with the strategy that you use, right? The Matt Maylie strategy, if you will, you're trading the volatility regardless if the market's moving higher or if it's moving lower. So it doesn't matter if the news is bad. It doesn't matter if we go into what, people are talking about recession and other things. It doesn't matter. We're still make money in the markets. And that's why you're able to use this strategy regardless of what's going on in the markets. Correct, Matt?
Yeah, that's right. I mean, like I said, back in whether it be the dot-com when that bubble burst, but we also saw it in a bigger way in the when was it the Big Short? Remember the Big Short, the book about talking about the financial crisis? Well, some of these unbelievably big hedge funds made $1 gazillion. I mean, many made huge billionaires out of several hedge fund managers. And that was great because they were able to make those negative bets But individuals can't do that because an institution can go in to a Morgan Stanley or Goldman Sachs and buy an over-the-counter option because they're such big size, and it's worth those big brokerage firms to sell those products. But for an individual, if they're just buying small, I'm not talking, even if you want to buy, $200,000 worth of this stuff. But Morgan Stanley is going to say that's too small for us. They want multi-million-dollar trades, and in many cases, 7 or 8, 9-figure trades before they would do something like that. But now, because we've had this big change in the marketplace, where we have these ETFs, but also inverse ETFs and leveraged ETFs, and then of course the weekly options have made it, which are very liquid now, has enabled the individual investor to take advantage of this, which we never could do in the past.
Yeah, and that's really why you're able to get these massive gains. Like, a couple of weeks ago, wasn't it like 14,000% on FXI calls that you got?
Well, that's just, it's funny because we've made some nice calls today. We had one of the people in the chat room mentioned they made 288% on some QQQ puts that they own today, and they asked me what should I do with them. I said, well, sell a third of them because that guarantees you they won't lose any money. And sorry, knocked my thing down. And then I said, hold on to a bunch of them. And of course, the market went down further, and they made even more. So it was so you can make it in both directions. But the one you're referring to is this called the FXI, which is actually an ETF on the Chinese stock market. Now, I do focus on the U.S. stock market, and whether it be individual stocks, ETFs, or group ETFs. The ETFs meaning the index ETFs. And I mentioned the QQQ, that is the ETF for the NASDAQ 100. Then we also have the SPY, which is the S&P ETF, and the IWM, which is the Russell 2000 small cap index ETF. But we also have things like the XLK, which is the tech ETF, the IBB, which is a biotech ETF, et cetera. They all have inverse ETFs. They all have leveraged ETFs, and they all have very liquid options, they expire every week. And so we've been able to really play on those. And in the FXI, which was the energy ETF, the Chinese ETF, it came in, the thing had become so incredibly oversold. A lot of different things were going on. Number one, of course, China was clamping down on a lot of their technology industries.
Maybe let's show it to them on your Bloomberg.
That's great. You got me. Can you? Okay. Yeah. Can you let me share here? Let's do the screen share, and let's see if I can do that.
But yeah, and maybe that could be a good segue into, because Asif wanted to see some of the other trades from the chat room. So maybe that's a good segue so that you can show them not just the recent trade that you made that you banked on and the members did, but show them a couple trades from the chat rooms for Asif there.
Yeah. Oops, I just lost my. Hold on, what happened to it? There we are. Sorry about that. Just give me 1 second just to pull it up. My apologies. I had it set up, but then I clicked the wrong button and suddenly it disappeared. But just only take 2 seconds here. So what happened again? I talked about the Chinese stock market had become ridiculously oversold, and I believe from past experience, number one, it was the technical basis, even though it deserved to be down, it was way too oversold. And I looked at both what we call the RSI, the Relative Strength Index, and that deals with whether a stock is overbought versus oversold on momentum basis. And I also looked at what's called the Bollinger Bands, and I'll look at that in a second. Hold on a second. Let me they're pulling up here. Let's see here. There we go.
Okay. Yeah, and I just want to say really quick, guys, for y'all to know, Matt Maylie has the record at Benzinga for the trade alert with the highest percentage gain, with entry, with exit. Okay, entries and exits for everybody that's of course a member. And the prior record was actually from Matt Maylie when he got 7,000 or 8,000% on Viacom puts, which we should show them as well after. But
yeah, I'll definitely show that as well. And again, that was last year, so it's not. This is. I wish I could tell you we do this every week. We'd all be retire by Memorial Day, but it is something we do. We've been able to garner on several occasions, on a couple of occasions, but we've also had some real nice moves that have been anywhere from 300, 500%. Just today, as I mentioned, the one with the QQQ that we bought this morning, made over. Well, by the time we sold the balance, it was over 300%. Now, so these are the types of things that we get these home runs, but we're also looking at, things where we can get up 20%, 50% in a day or two. And of course, we have some losers. There's no question. And the last thing I'm going to try to tell you is that I bat 1,000. Anybody says they bat 1,000 in any market, whether it be the options market, the stock market, bond market, whatever, they're lying to you. I guarantee it. But just to go on this just trade again, is that what we looked at was this right here is what's called a relative strength index, RSI, right down here. And this measures again momentum, and when you get when things becomes too oversold, when something gets too oversold, it gets down to this 30 level, which is the green line, which means it's green, says go ahead and buy, and then when it gets up to the red line, which is 70, stop, don't buy anymore. It's getting too overbought. Well, look how incredibly oversold this got. When it gets to 30, it was usually a time to buy, right? It got a little below 30 there, a little below 30 there, it bounced. Here it got a little below 30, bounced. Here it got ridiculously below 30. I kept watching it because there was good reason. I mean, the Chinese government was clamping down on their tech area. And of course, we were threatening and still are threatening to delist a lot of these technology companies. But I said to myself, first of all, looking at the technicals, so on the technical side of things, this has gotten ridiculously oversold, but also know fundamentally that China's not going to let their stock market fall to bed. They want to remain one of the leading, growing as to eventually they want to be the biggest economic power and the second biggest right now. They can't let their stock market crash, and they have a lot easier way for them as a communist country to come in and support it. I figured they would because they had done that in the past. Well, sure enough, I came in on this day in mid-March and said, listen, we got to buy the FXI call options. Like I said, today we had the put options that we made some money in. This is back then. We made the call options. We want to be able to make them in both directions because volatility, obviously, as we've seen in the last couple of weeks, market was going straight down for 2.5 months and then went straight up for 3 weeks. We want to be able to take advantage of it both directions. So here was the market was oversold, and this is what happened the next day. The next day, or next, I guess, 2 days, up 27% in 2 days. Okay, that's just on the stock. Okay. How many markets go up 27%? Individual stocks, these meme stocks, but even big cap names rarely rally that much in a single day. But this did, okay, because it becomes so ridiculously oversold, and that's what it did. So there is, at that time, that's what we see on the other. As I said, this weekend's updated chart over here on the left. That's because the chart was when I wrote it that time. But disregard that part. But you can see what happened here because it was a couple of weeks ago. And then here we are. We went out and we bought the FXI March 18 $30 call option. Okay, we bought this at the end of the day on the 15th. By the next day, okay, by about 10:30, 11 o'clock, I said, okay, it's up 3,000%. Let's take some profits. I said, don't tell all of them, sell some of them because it become, usually I say 3,000%. Let's just sell the whole thing, pat ourselves on the back and move on. But I knew that this thing was ridiculously oversold. But not only that, I knew the Chinese government was in there buying to protect their thing. And then we're going to, sometimes you see huge bounces like that, and then it rolls back over because all the buyers covered their shorts and everything. Well, it didn't matter what happened to the shorts here because the government was going to keep on buying. So we held on even longer, and it went up over 7,000, almost 8,000% by the end of the day. And then I said, okay, let's sell more. And then if you waited till the next day, which some people did in the chat room, as much as 14,000%. Not 1,400, 14,000%.
These trades, just to be clear here, Matt, you posted the entry,
right,
the exact contract, the strike price, everything to the dot, right, to the letter. And then you also gave them the alert, hey, I'm selling, it's up 3,000%, everybody. And then again, you told them to sell when it was 7,857%.
Right.
So, I mean, all it takes is one of these trades, fellas. All it takes is one of these, and that's it. And I'm not going to mention users. I've been doing this for a year or so here with Benzinga, and I talk to these folks in the chat room. They reach out. I'm telling you, that day of the FXI trade, my email and my phone did not stop. So like people were calling me, just wanted to thank me and hey, say thank you to Matt. Some people were even trying to Venmo me money, and I'm like, hey, yo, let's not go there. But it was, and some people, I'm not going to mention the usernames, of course, for their privacy, but several people made hundreds of thousands of dollars in that one trade. So it was a lottery ticket. And these again, Matt's not chasing these things. The market gives us the right opportunities, and we take them. Again, you could have put 100 or $200 on this. Okay, 14x, 10x your money 14 times back to back, and that's what you could have gotten here. But and okay, so let's talk. This is a great trade. This is one of the home runs, right? That I can say. And how did this all come up, Matt? Like, in the chat room, this is regular day activity, right? You're
Yeah,
always
I mean,
posting entries and exits, correct?
right there, and this particular one came up, and I just said, I initially said, look at this, the China market is really getting oversold. I'm going to want to look at some of these options here. It's got to bounce back soon. And I think it was the very next day I came in and said, okay, this is the time to make the play. And what we have in the chat room, this chat room scrolls all day long. And so we have a separate page, which has an alarm on it too, where I put in my actual trades. And it's not just my actual trades, that's mostly what it is, but where I say, hey, we want to go in. And in this case, I went and said, this is what we're going to buy. We're going to buy right now, the FXI. I gave the symbol on, the asset that we're trying to do the play on, the expiration date, March 18th, the strike price, and whether it's going to be a call or a put option. Put it right in there. We want to buy it right now. I don't put the price that we're buying it, because that can happen in some people see it's 30, 2 or 3 minutes later. Every once in a while, if the market's really moving, you might get a much different price, but very, very, very rarely. And so let's just say, so if I paid 35 cents for it and you paid 32 cents for it, good for you. You might have paid 38. You might pay a few pennies more, a few pennies less, but it's not, and I always give it to you before I buy it. I don't, buy mine and then hope you'll run it higher for me and then sell it. That's what these pump and dump people do. I don't do that.
Right.
And then when we came in, as Rodrigo said, I came in and said, this is where we're going to sell. We're going to sell right now at this price. Right at this time, okay? And this is where it's trading at. Again, if you're up 14,000%, or even if you're up 3,000%, and you're up and you sold it, you were in the bathroom, you came back, or again, we have these alarms so you can be alerted to it, and you sell yours a little bit later. Maybe you make a little bit more, or a little bit less, but it's not. You suddenly, if you're up 3,000%, you don't turn around and sell it down. It's only up 100%.
Right, and the skip lead. What happens whenever? Yeah, I mean, skip lead, that really doesn't happen, and these options are pretty liquid. Hi Santos, I'm a noob. Do you have a guide where I can learn things I need to just get me started? Hi Santos, yeah. Once you join, man, I can send you some resources definitely to help you out. And I'm just showing you guys the chat room itself so you can see the format. As you can see, Matt's been loading up on puts, and they definitely paid off. But this is where you'll see the clear entries, exits, right? The contract, the strike price, all that stuff. Only Matt can post there. So there's no confusion. You can literally find the trades easily without having to scroll and, like dig through the conversation. Separately, you do have the chat room where everybody else is posting, having a great time. I later on I'll come here and I'll show you the the chats and everything. But yeah, Matt, I just wanted to show them the actual yeah, Miguel, yeah, if you join, I'll give you the material as well to help you get started. But yeah, that's the chat, Matt. But go ahead and take over the screen if you can.
Okay.
And we can go over here with the Viacom trade, because I think it's just really important to know the fact that, hey, these things will come to you. You don't have to chase them, right?
Well, that's one of the biggest things, that people, you can't make this stuff happen. It's like, geez, I really want this stock to go, I want the stock to go up, these options to go up several thousand% or several 100%. Well, I'd love them all to go up that way. But if the setup's not there, you can't, it's very, very difficult to get that trade. So let's see here, pull up here. Whoops. Okay, here we go. Okay, let me just hit escape here real quick. And let me get into my Viacom trade. Hold on one second. But anyway, but the point is, they don't come up every day, and you can't make them happen. And so many people say, geez, such and such a stock is way up. It's got to go a lot higher from here. And I'm like, well, what, it doesn't have to do anything. It's, you got to wait for the correct setup. And if the setup's not there, we're not going to jump on board just for the sake of jumping on board. I apologize here. Hold on one second. Let me just get the Viacom trade.
Yeah,
here.
no worries. And just for everybody to know, guys, this is the most simple type of trade that you can make, buying a call or buying a put. So it's really not, it's not complex. We're not doing spreads. We're not doing butterflies. Matt's literally just buying calls and buying puts. You can do that at any brokerage, no special permission, right?
Right,
So
right.
yeah.
I think you do have to open an options account at a firm, but they're very easy. This is not, and like I said, once in a while, today, actually, I did do a trade yesterday, very small, a strangle. But again, that wasn't very complicated. I think we can review that, what I did and why I did it. But here's what we had with Viacom. Again, this is looking at the, again, this RSI chart. Look how when the stock got overbought here, it went down. And when it got overbought here, it actually went down just a little bit. Then it got overbought here, it went down, overbought here. Then it went down, it started getting down more. Here it went down. But look at this. Look at how overbought this was. And this is on a weekly chart, weekly relative strength index chart. It was ridiculously overbought. And I just came in and said, okay, these guys, there was right in the middle of when the first meme craze really took off. And I'm like, I'm sorry, Viacom, great company, but they're not going to cure cancer. They're not going to come up with a new, whatever, new technological advance. They're a media company. I mean, they're CBS and Paramount, and this is out of control. Let's buy them. Let's go out and let's buy the puts. Oops, let me just show it to you here. Oops. Oh.
And this was a meme stock that everybody was chasing up to the upside, right?
Right, exactly. And we bought the puts. Okay, I'm sorry, I can't find the chart on the actual put option, but again, you can see how what happened. You can see what happened to the stock. We went out and bought the puts right here. We bought the puts right here, right where the circle is, right at the top, right at the right, and it just came crashing down. The stock went down 60% in one day. I tell you right now, if a stock goes down 60% in a day, the put options are going to fly through the roof, and these things did. As I mentioned, they were up 2,500%. I said, take some profits. They got them to 5,000%. I said, anybody who's still left in them should take the rest of the profits. And there's one of the persons in the chat room came back to me and said they actually made more than 10,000%. I couldn't verify that. I say because I had already sold. I was out, so I can't take credit for that one. But at 2,500, I said take profits. And then that's where I took my profits. But then I went back in about an hour or two later, and it said, if you're still in it, sell the rest of them. And that's what some of the people did. And they even did better than I did. But these are the types of things that they don't come up very, very often. But when they do, we want to jump all over them. And like I said, and we're not coming in telling you, hey, we're going to do this every month. Again, we had one of this last year. We had one this year. But we have had quite a few others that have gone very, very well. And this is going to be a great example right here, what we did in December. Whoops, hold on. And where we made several 100% rather than, again, making thousands of percent. It's not going to happen very often, but we've done it, been able to do it more than once. And again, when you're involved in markets, they come up more often than they used to. But look at this, what happened here in the QQQ. Now, again, this is the QQQ is the ETF for the NASDAQ 100. And the NASDAQ 100 is a subset of the NASDAQ, the NASDAQ composite. It's the biggest 100 names, and it's highly, highly weighted in the tech names. And I like to do it because those tech names are so volatile that they whip around a lot more, and we can make more bang for our buck than we can in some of the others that are a little less volatile. But anyway, this is what came in. We were going into the Fed rate decision the Fed, it wasn't a rate decision, but it was we knew the Fed was going to come out and announce, hey, we're going to be raising rates soon. We're going to be more aggressive, and we're going to do we're going to start not just raising interest rates, but not just ending QE, but we're going to start doing QT. In other words, start to shrink our balance sheet. And this was talked about by a number of different people going into the Fed meeting. And so it was just a matter of is Fed Reserve Chairman going to actually confirm this, because he hasn't really said it. All these other members of the Fed have, but he hasn't. So we want to hear it from the horse's mouth. Well, sure enough, the market went down. Not hard, but it went down. And I went in and said, literally at 1 o'clock, 1:30, the decision was coming out at 2. I came out and said, it's already priced in. Everybody knows that what they're going to say now. It's just a matter of him confirming it. So it's already priced in. This market is going to bounce. So let's buy the calls. So we went and bought the December 17th calls. This is on the 15th. They only expired 2 days later. But the 392 call option. So again, I came onto the website. I'm sorry, onto the chat room. QQQ, expiration date December 17th, the strike price, and which option, call or put. This was a call option. And sure enough, at 2 o'clock, they made the announcement. The stock, the market, took off, and the call option ran up. It started to settle back in a little bit. Then at 2:30, Powell started his press conference. He said everything everybody was expecting to say, and sure enough, the market took off. The next morning, the very next morning, before the market opened, I was in the chat room saying, we're going to sell these things right at the opening. Okay. Now, if you sold them right at the top, it was 361%. Other people maybe sold a little bit lower. Either way, 340, 350%. It's very hard to get the exact top. So right. I can't imagine anybody did. It's okay.
And these are trades that, again, these are all posted on the chat room, correct?
Absolutely.
Entries.
Both the entry price right at 130 and right here. Actually, I was in there and I was sitting there going at 10 after 9, 20 after 9, and then at 9:30 I said, okay, we're gonna do it. I said at 10 after. At 20 after I said we're gonna do it, and then at 9:30 or 9:31 I said, okay, let's do it. And so it's very specific.
And what are the, someone's asking, good question here. What's the schedule of the chat room? It's Monday to Friday, right?
Monday to Friday. And then, but we also have on Tuesdays, which we have today, where we have a Zoom call at 11:30 Eastern time. And we go over several different things. Today, to be honest with you, I was going to try to do a more of an educational one, but the market was moving off of this news from the new Fed Vice Chairman, or first chairperson, Leonard Brainerd. She was a big dove on the marketplace, and she was turned a little bit more cautious recently, and then today she was much more hawkish. And that really, that's the reason why the stock market was down today. And we had a lot of things going on. So I talked more about that in the Zoom call. But again, what we try to do, we do some educational things, talk about technical analysis, or, one time we just talked about, how I pick the actual trades. We say, great, you're negative on the QQQ, or you're positive on Apple Computer. That's fine. But how do you decide which expiration date and which strike price to use? And
right.
So we talk about things like that, and then we talk about what's going on in the market, and what some of our calls that are trades that are in play right now, and where's it going to go? I think it's going to rally a lot more. I think we're going to take profits soon. Things like that, and just kind of a general more. Rather than just reading something on a piece of paper, but and then we have some Q&A. There's a lot of questions coming in the chat room, and I answer those. And so it's a Zoom call we do. I'd say 20 minutes to a half hour. Today was about a half hour, but sometimes they go longer. Sometimes they can go as long as an hour, even longer, when the markets are really running. But so that's what we do. It's not just the chat room. We do that Zoom call, and the chat room. Basically, I get on today. I got on a little bit earlier. And then get on around 9 o'clock, and off between 4:30 and 5, and we go all day long. And it's and again, if something big's happening overnight, I'll be on that thing at 7 o'clock in the morning. If we walk in tomorrow and today's stock market sell-off, it becomes some big downside fall through. Believe me, I'll be on long before 9 o'clock tomorrow. And I'm not saying that's going to happen, but if it does, I will.
And hi, Santos, good question. How much would you need to start? So actually all these contracts that we're trading are anywhere from 70, 80 cents to $1, $1.20. Like these are, just with $100 or like $120, really, you could buy a lot. So if you're doing different types of trades, if options, yes, you might need more, but the types of trades that we're doing, you literally just have to buy a call. And these calls or puts that you're buying, Matt, are very, very affordably priced, right? These are not.
Yeah, for the most part, there are some, but I always tell people, for instance, if it's a very high price stock, the options are going to be expensive. So if you want to do something in Amazon, especially before they haven't split yet, and Tesla, these are really high, stocks in the thousands. Those are harder to play. And so you need, it's like just to buy one contract might cost you $1,000. So it's like, well, it's just not one I'm going to play in. And in fact, that's one of the reasons why Tesla announced a stock split. It hasn't split yet, but when it does, suddenly those options are going to become much, much more affordable. But for the, so every once in a while, I'll say, hey, let's look at Tesla, but be aware they're very expensive. And if it's not what you want to, $1,000 just to buy one contract, I understand why you don't want to play. But most of them, we're definitely, you can buy.
The QQQ puts and calls that you're buying, those are like really.
We try to focus around when they're about $1. I mean, sometimes cheaper.
Yeah.
Very rarely more expensive. But yeah, so it's like if it's trading for $1 to buy one contract, it's going to cost you $100. So that's if you only have $100, it's hard. But you don't need $200,000. You don't need tens of thousands of dollars to get started. And some people start off by just trading very, very small, and then and then keeping a paper. So they'll say, okay, I'm just going to buy one contract here, but I'm going to keep a paper portfolio, or I'm going to pretend like I actually bought 100 contracts, and just to keep so you can make some mistakes without losing too much money.
Let's go ahead and move over here to the next trade. So this is a QQQ call. All right, perfect. So let's go to. Do you have another trade here?
Well, the next trade, it was literally the next day. Okay, we saw this big rally here. You can see my arrow, and then I said right at the opening, I'm like, first of all, what has happened here is negative. I just think we're going to get a short-term pop in the market because it's already priced in, but it's still negative, and I'm worried. So the very next day, it's actually this day. Whoops. Let me just go back here. Remember, I made it one day. That was on Wednesday the 15th. Thursday morning, okay, made this trade. And then on Friday, I came in. So it was literally Wednesday, Thursday. I took one day off, and because we sold the morning, and I came in and I said, hey, this is still negative news. Let's buy the put options. So I went right back in, QQQ, December 20, 383 put option. And we bought it. We're in the last hour of trading, because sometimes you get those funky moves in the last hour of trading. And sure enough, over the weekend, we got, everybody kind of digested what the Fed had done. You can see here, or down here, it says December 17th, and this is December 20th. That's because the 18th and 19th were part of the weekend, were Saturday and Sunday. We came in, same thing, up 240%. And I said, let's sell it right near the opening. Let it open and then sell. And this is what we did. Now, if you'd held on longer, you would have made us a little bit more. I didn't, but of course you've been down here saying, oh, I wish I had sold, and you may not have had the patience to hold up here. But I just got out. We made 300, almost 400% on the call option on Wednesday to Thursday. Then from Friday to Monday, we made 250%. It's over 500%. I'm not playing with that. If you take your money and run, pat yourself on the back, and move on to the next one. And if it goes up higher, it goes up higher. But that was, again, one we did just just a couple of it's a couple of months ago now. But the point is, and here's another one here where we had the call options back in December, right around Christmas time, and people were really worried about Elon Musk. Again, 176% on the call options. Now, this was an expensive option, okay, because it's $1,000. Not everybody can participate in that. But again, I try to keep it into the ones that are much more reasonable to buy. So if these things are trading at 50 cents or $1, you're paying $50 or $100 for one contract. You can buy more than that. I love this. You can get a 50-cent contract, and if you can buy, if you're buying so small and you just want to buy, you can buy $200 worth. Well, now you've got 4 contracts. If it runs up, you can sell half and then hold on to a little bit. The one thing, the fallacy that I think a lot of individual traders are like, especially even in a common stock. Geez, let's say you have $10,000 you want to put in Microsoft. That's great. You don't have to buy it all at once, and you don't have to sell it all. But more importantly, you don't have to sell it all at once. You say, hey, I've had a nice run. I've doubled the stock. I've held it for several years. I've doubled the stock. Great. I'm going to sell half my holdings. So now I've got 100% gain on half my holdings. That means that if the stock goes to zero, which Microsoft is never going to do, stock goes to zero, I'll still come out flat. Okay. But so this other thing that we try to talk about too, is we talk about portfolio, risk management and doing these things. And that's what happened today. Where one of the players, one of the members of the chat room, like I said, made 288% on the QQQ puts, and we didn't sell all of them. We sold we sold half of them. That guaranteed us not just a break even, but guaranteed us a profit. And then we had a stop level. I was like, if the QQQ gets to a certain level, we're going to sell the rest. Okay. So by then, on half, we made 288%. We would have made a little bit less, but we wanted to give ourselves room to let it go higher, which it did do. So it's not, again, we're not going to just let them run to zero on the balance. But so again, this is the whole thing with risk management. So these are the types of things that we're constantly trying to look at. And it's one of the things I had here. This whole idea when I do is we want to just, everybody's talking about, well, we could have a bear market, an inverted yield curve, it could be a recession, et cetera. I think there's a good chance of that. I do think Jamie Dimon is right. We're going to have a lot more volatility, but just weathering the storm, I mean, that's fine, but let's take advantage of it. Let's, that's how you maximize your returns. If you're somebody that's going to weather the storm, then that's fine. I want to, and like I said at the beginning of our little meeting here, is that we now have the ability to do it. And just to review that really quickly. So what am I talking about? Well, back in 2000, if you were really negative and you had to time it perfectly, because you had to buy options. The thing is, when the market really got clobbered, you had to time it perfectly, because the only options you could buy, if you wanted to buy some put options on some of these tech stocks, they only had quarterly options. So that means that you had to go out 3 months. And of course, there's a time value, because whoever the broker who sells you those options, it's basically insurance, right? So they're going to charge you a much higher premium for the simple reason that it's going to, they're at risk for 3 months. If you buy a put option that only has a week to go, they don't have to charge you as much because they're at less risk, right? Because they're only at risk for 1 week, or maybe, and so that's why we go out a week or 2 weeks or 3 weeks, not way out. Although we do some out in the future, don't get me wrong. But where we go out, a month or two. But the point is that you can do that because all of the major stocks have weekly options that expire every single Friday. All right. Now, same with the ETFs, the group ETFs, like the XLK technology ETF or the XLE energy stock ETF, or what you name it, they all have weekly ETFs. Now, for the market overall, if you want to buy the index ETFs, you can buy those 3 times a week, Monday, Wednesday, Friday. So if you want to make a really short-term bet, especially if the market moves in a big way, that's where you can get these big moves. That's why we got those big moves in those QQQ puts, because I only had to go out a couple of days. The market was poised for a big turnaround, and we saw it now, and we took advantage of it. It's what happened today as well. When we had yesterday, we were getting into the close, the market was rallying, and I went into the QQQ puts. Let me turn that off. Sorry. QQQ puts right at the end of the day, and I said, and it was funny because I bought a few calls just to hedge myself, but I had about 5 to 7 more times money in the S. And this was not a big trade. I did not spend tens of thousands, hundreds of dollars on both sides. That was it. Okay. And there's a lot of times I'll spend more than that, but this one was, you could easily have done this trade by putting $500 on one and $100 on the other, or even $50 on the other. Okay. And the reason why I did that is that the market had rallied so much in the last couple of weeks. I knew it had to do one thing or the other. It had to either keep on rallying in a big way or get hit hard. It ended up getting hit hard. I skewed it to the hard side. So in either way, I made more money. If the market had kept rallying, okay, I would have made 5 times my money. I probably would have made 500%. Okay, if it rallied strongly, and it would have covered everything I bet. So it's basically what I'm doing is like, well, you came out, we wouldn't have made any money. That's fine. That was not my bet. My bet was to make money to the downside, and I hedged it by buying a small amount of call options. Okay, so the call options, the put options made so much more money than I lost on the call options, not even close. So it's those are the type of things I do. But the point was that I only had to go out one day. I bought them for today. Okay, I'm sorry, yeah, well, yesterday, and sorry, bought them yesterday for tomorrow. In other words, it was Monday, and the next expiration, I only had to wait until the Wednesday expiration. And we sold some of those for a nice profit, and then rolled some out, et cetera. But the whole point is that these index options, when the indexes are moving quite a bit, you can really make some big returns because you have to pay such a small time premium. And again, when the market's doing nothing, if it's this summer, those index options are not going to be the best place. that's assuming the market doesn't calms down over the summer. It doesn't always calm down. If it stays volatile, they'll stay that way. But then we'll kind of wean our way away from those and go into individual stocks. And especially with earnings season in July, there'll be a lot more moves there.
Right.
So we play them in both areas.
Yeah, and let's go over some of the trades from today that you made in the chat room.
Okay, well, let me just go to the bang here. Let's go here because I want to go. This is my Bloomberg page, okay? And let's just go. Hold on one second. I just want to pull up my portfolio so I'm not giving you bad information. I'm sorry, I should have had this up. Give me 2 seconds here. I just have a different clipboard here. I got not clipboard, but the keyboard. And because I like to be exact when I'm telling you. It's like, hey, we made this much, we made that much. Anybody can claim stuff. You want to be able to tell people. That's why I like to bring up those Bloomberg charts to show you exactly where those things were trading. Okay, hold on one second. I apologize. Ah, shoot. Okay. Okay, but again, we took advantage. Now we already had some puts trading. I have no. God dang it. Okay.
Yeah, we're getting a couple questions here about the chat. A couple questions about the chat room. So I'm just going to go over this really quick here. The schedule for the chat room is Monday to Friday, 9 to 5 p.m. So basically, Matt is whipping out trades, giving you entries, exits. This chat room's been around probably for like maybe 6 months, I'd say 5-6 months. And it's really the only place where Matt Maylie's doing options, right? Everything else is stock picks. This is the only place where Matt Maylie is doing options when it comes to calls, puts, that sort of stuff. It's every day. The session's on Tuesday. Everybody that joins today, by the way, I forgot to mention, everybody that joins today will get a free laptop, right? And if you do want to go to our FinTwit event, which will be awesome in Vegas, you will also have the option to do that as well. So I really think you should go. But yeah, we have a great stuff, a great setup there, guys. But again, don't miss the deal we have. It expires at midnight, and I really think you should join, guys. 7-day money back guarantee. It's really risk free for you guys. No joke. But Matt, were you trying to show the PowerPoints or?
It's just not working right. So I apologize. But now they said that I've got to reset my password, and that's going to take too long. So but the point is, and you see what happened with NVIDIA. We came in today. And okay, here's the stock. Oops, so here's the stock. We came in this morning right in here, okay? The first hour of trading. It's like, okay, the stock was getting hit. Look what the stock's down 5%, okay? These options, and I don't have the exact number here, but these options went through the roof, and I wish I could pull them up. I just can't. It's impossible for you to do that. I apologize. Darn it. But anyway, we made over 100% on the NVIDIA puts. We also made the QQQ, as I mentioned. The one person had the 368 puts, and they made over 280%. They made over 300% on the rest of it because they took profits in here. You see how the QQQ, how it just sold off in a serious way, down 2%. For an index, that's a big move. Okay, for NVIDIA, 5%. These are the types of things that allow you to get huge triple-digit options returns when you catch them right, and that's really what we've been trying to do here in the marketplace. I apologize again for not having.
Okay, is that That's the present. Okay, yeah, that's the presentation. But there were some trades from today that you made in the chat room.
Well, we'd have to pull up the chat room. Okay, let me just pull that up here. Hold on. Okay.
But yeah, I know you were mentioning some trades from the chat room. That's why I was saying it.
Yeah, I mean, it's just, you gotta tell me you gotta do these things, so. Okay. 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 There we go. Important messages. Okay. Those are yesterday. Let's pull them all up here. Okay. Okay. There we go. Okay, this is what, okay, strangles. Okay, here we go. I'm going to hold by the 200. So this was at 1038. 1038. Remember, on NVIDIA. Okay, 1038. So that's right about in here. Whoops, right in here. So let's see how much should the stock go down further? So the stock went down another 2%, and these options, are up. I just don't know. I can't pull up the thing. I'm sorry. I just don't, Rodrigo. I can't pull those up on my Bloomberg. So it's just unless I have them set up in advance, I can't really do the trades I did today unless you let me know that in advance. But
well, just let us know what the trades were.
Yeah, that's the trades. We bought NVIDIA puts. We bought the QQQ puts. See here let's see. Here's the trades we did at the end of the day. Strangle. This is, I'm going to buy some of the SQQ, okay, SQQQ, $35 calls, okay, $34 calls, okay?
That was yesterday, right? Or
that was yesterday, late in the day.
Okay, let's pull up the chart now just so that we can show them, show everybody here.
Okay, so this is what it did today. So here we go. This is where we bought it right at the very end of the day. Now I can't pull up the options because I just can't do that. I have to do that in advance. But look at this here. The SQQQ, and we still hold. Okay, the SQQ is up 6%. Okay, these options are up more than 100%. Okay, 6%. That is a great move for one day. When you get that kind of a move, you get the huge rally in the options. So that's what we. Those are the types of things that we did just in the last couple of days. Today.
Yeah, I want to give a quick shout out here to Melanie for joining the Stock Picks Inner Circle chat room. Welcome to the family. So yeah, that's what I mean. We just showed you pretty much Matt's. I mean, we don't have the right now. There's some technical issues, I guess, but Matt literally went into the chat room, showed you the trade with a timestamp, entry, exit, contract price, and we're showing you the chart. You could do the math and you can see what's happening, right? So even if we're talking about a 6% move, the calls we're buying or the puts we're buying, they're going up by several 100%. So that's really how Matt's able to achieve these gains, really, guys. So the way that I do it, I put a couple $100 into each of these trades. If I get if I get like a 7,000% with that, just do the math for me, please, okay? But even without that, the consistency of trading with Matt with the volatility, I've been trading Matt for about over a year now, and I can tell you it's done very, very well for me and for all the users. You can go ahead and try it. We're so confident that we can actually let you try it 7 days. We have a 7-day money back guarantee. 7 days. ASIF says they were up 200%. Some people even so, for example, let's say that Matt buys such and such contract, just because the people that have been with him for so long have made money with him, they're like, look, when Matt's right, he's right. So I'm going to go ahead and buy some even riskier calls or riskier puts that Matt's not even. So, but at the end of the day, guys, I suggest to follow the trades because Matt is giving you the exact contract price, expiration, and he's going through that options chain, doing that analysis for you. Okay, we're talking an equity analyst here, 40 years in Wall Street, literally picking the contracts for you. Okay, if you're new, this is what you need. If you're trying to make money with options, this is it. It's not spreads, it's not butterflies, it's trading volatility. Don't sit on the sidelines. Don't wait for everything to be perfect and unicorns and all that stuff. You have to get in there in the trenches. And the people that do that are the people that make the most money in this market, right, Matt?
Absolutely. I'm just trying to pull up on my regular Bloomberg here, which I can do on my own screen here because I got 4 screens. But when I'm doing it with this presentation, I can only do one. But let's see here. I'm going to see those SQQQs calls that we bought late yesterday. Dang, okay. Let's see, 35. So there's a $34 calls options. Hold on. I'll tell you exactly because I want to be more exact. The okay, good. So those things were up 248% as of today's close. Okay, and it's actually a little bit more because we bought them late yesterday. 248% is how much those SQQQ calls that we talked about are up. So it's just hard because on my one, when I'm using this one screen, I can't pull up. I'm used to having 4 screens where I can switch to screen to screen to screen and pull up different charts. So it's a little bit tougher here. So I apologize for that, but it gives you an idea of what we can do and what we're trying to do. And just to go a little bit about my background here is that Rodrigo talked about me being 40 years on Wall Street. Well, this is not just something that where I'm a strategist, right? But I spent 25 years trading on Wall Street. I was trading in the Solomon Brothers. If you guys are familiar with that, if you read Liar's Poker, you know what that's from. It was the biggest trading desk by far on Wall Street in the 70s, 80s, and 90s. I was there for 15 years in the 80s and well into the 90s. I went through the 80s. I was my 5th year there when the 87 crash took place. And I've been through these kind of volatile timeframes, whether it be the 87 crash, whether it be obviously the big bear markets of the last the last 20 years when we had in 2000 and then 2008. But these the situation is such that I'm here to embrace these things. So many people are trying to fight them. You listen to the people on CNBC and Bloomberg Radio and Bloomberg TV. I mean, they're all very smart people. They're all very good at what they do. But many of them, they work on the buy side of Wall Street. A lot of their guests, and they're basically paid to be bullish. That's what they do. I mean, when was the last time you heard an economist predict that we're going to have a recession until after the recession has already taken place? I mean, right now we have Goldman Sachs saying there's a 35% chance that we'll get that we'll have a recession. Well, if he's saying 35%, he really thinks it's 80%. Because you can't keep your job if you're predicting recessions on Wall Street. I mean, maybe a guy or an economist at a university or something, but where he doesn't have any skin in the game. But those people are paid to be bullish. That's why the vast majority. There's like less than 10% of the ratings on Wall Street are sell ratings. Okay, because the companies won't talk to them. If you're an analyst and you want to get to how's your quarter going, and say, well, you have a sell rating on my stock. I'm not going to tell you. I'm not going to take your phone call. I'm going to take the call from Morgan Stanley because he has a buy rating on my stock. And if he has a hold rating, it's okay. But nobody has sell ratings because that's not what they're paid to do. They're paid. They're in sales. They're paid to be bullish. Luckily, I work at a firm where at Miller Tabak. And again, you may have seen me on CNBC or Bloomberg TV all the time, sometimes on TD Ameritrade Network, Yahoo Finance, etc. These things, I just was participated in the CNBC what do you call it, poll for whether I think there's a recession and when it's coming and why and when and why and whether why I think a recession, and I do think a recession is coming. But anyway, what I do is I do what people are trained to do, other than what they're trained to do, because I'm in the trading business. Since I was a trader, I don't care about what should happen. That's what the theoretical economists do. That's what the theoretical analysts do. I was on the trading desk covering the biggest trading desks on Wall Street. Whether it be, these, I'm talking about the institutional desk. I covered the biggest mutual funds, the biggest mutual fund in the world, the biggest hedge fund in the world, and everything in between. And then we had also insurance companies, other money managers, et cetera. And they don't, all that stuff that about theoretical sounds great, but that's how we were able to theoretically, a Chinese stock market should have continued to go down because the Chinese government was cracking down on them. And we also had this issues that the U.S. government was talking about delisting a lot of these companies. Well, my work, because I learned that you got to look at technical analysis, you got to look at sentiment, you got to look at positioning. I saw the positioning; everybody was short these names, and everybody was the sentiment was really negative against it. So I knew on a short-term basis the FXI had to pop, and sure enough, we made several thousand% return because I didn't just look at I looked beyond the fundamentals. That's what you have to do because the market is not always right. It's only always right eventually. Okay, and that's how we make our money. This is how, this is the time, as I say, we want to embrace this volatility right now because this is the time when people make a lot of money. In the old days, it was only the institutions could do it because they're the only ones that could make the negative bets. Now, that's not what we're only going to be doing right now. We make it, like I said, that FXI trade was a call. That was a bullish trade. Half of that QQQ trade that I showed earlier was a call, was a bullish trade. Okay, so we can't have the so we can make we have to stay very nimble, but we have the ability now. In the old days, it's like, okay, well, I own a put that's 3 months to expire. The market just moved 3%, and my option went up 10%. Well, if I own, that's fine. But if I own an option that's going to expire in 3 days, I mean, that option is going to go up several 100%, just like the SQQQ did today, going up over 200%. I think it's going to be higher tomorrow. We'll see what happens. But there's also, so that's really what we want to do. We will, as I said earlier, we don't want to just weather the storm, okay? We want to embrace the volatility. We want to take advantage of it. We want to maximize our returns. Because when this thing comes to an end, in other words, this volatility period comes to an end and the market, which I think will eventually become washed out and be down 20% or more, we're going to be sitting on a lot of money and we'll be able to put that to use. Where everybody else is going to be panicked and selling at the exact wrong time, we're going to be the ones keeping our heads and taking advantage of it. And this is one of the things that when we see going forward, one of the very important things that we need to know as traders, especially when we get an important bottom, which I don't think we got a couple of weeks ago, I think because, and I'll go into that in a few minutes, but this market, when you do see those bottoms, okay, what do you do? Oh my gosh, the stock's been traded at $50, $70. It's come all the way down to 10. Okay, I've got some money. People are finally panicked, finally said, I held on too long. I kept holding on. Get me out. Okay, so they sell it at $10, the absolute worst time to sell. We have the confidence because we've made some money during and we've raised a little cash too. So we buy some, but it's awfully hard to back up the truck. Nobody ever picks the exact low. So who cares? Okay, so you buy the stock at 10, then it suddenly jumps because the first spike is always an aggressive one. Stock jumps to $15. Great. Now what do? Well, you get mad at yourself for not buying more, but the right strategy is buy more. Okay, if you bought some at 10, you buy and you double down at 15, double down higher. Oh, wait a minute, I'm going to double down when it goes lower. Why would you double down when you're going lower? It's okay to add to a position on the way down a little bit, but if you buy something at 10 and it goes to 5, your average price is 7.5, and it's trading at 5. You've got a losing position. All you've done is added to a losing position. Now you're relying on hope. Okay, but for those of us who have the confidence and have made money on the way down, and we buy at 10 and it goes to 15. Okay, now we double down on the way up. Now we have an average price of 12.5. The stocks, we have a winning position. Okay, what happens if it goes down? Well, it gets down to 12.5. I'll sell, and I'm guaranteed I will not lose money. Okay, it seems ass backwards, but I'm telling you, it's the right way to play it. But the people who are selling at the bottom, what happens is they sold some at the bottom, and I'm just waiting for one more bounce so I can sell and finally get out of the stock. And thank God I didn't sell it at the low. Well, they're selling it at 15 when we're buying. And when the stock's at 30 and we've got a 12.5 average, we've more than doubled our money, and everybody else is sitting there licking their wounds saying, I can't believe I sold at the lows. So these are the things that we're really trying to achieve in our chapter.
And a quick question here from the chat. Is there a kind of money back guarantee for the live trading chat room? Yes, Bird, there is a 7-day money back guarantee for anybody that joins. You also get a free laptop. Jeff, that is correct. Absolutely. Um, but okay, yeah, good stuff there, Matt. Let's what would you say are some of the main benefits here of the chat room, really, of the access there that the folks get?
Well, one of the things, I mean, the biggest thing is that we're in it all day long, and we're trying we're not just talking about what I like. People are constantly asking me what, they have positions. Sometimes it's a long term position. Some of the trades we've done here have just been over, a couple of days or a week or more. But we've had, other people have positions. They say, hey, listen, I've held this stock for a while. It's burning me. Should I just throw in the towel and sell it now? And I'll say, hey, you know something? Don't. It's getting really oversold. It's probably not great on a long-term basis. You probably should sell it, but not yet. Wait for it to bounce a little bit here because it's oversold. Or we might see a situation where, hey, this is and believe me, there was a situation in Snapchat in Snap where people really liked the stock. It was getting ridiculously or was it Shopify? I can't remember, but it was getting ridiculously oversold. And I liked it on a technical basis. I thought it was very oversold, but I wasn't ready to pull the trigger. But I encouraged the others who obviously liked it better than I do. And sure enough, they made 500% in a day. And I was like kicking myself the next day for not doing it. But in other words, people are constantly asking me about ideas that they have that I may not necessarily trade in. Or sometimes I'll say, hey, that's a great idea. And I didn't even see that. And I'll jump on board too. But you have an idea or you've gotten into an idea that I passed on, or you have an idea that I have gotten you into. It's like, hey, wait a minute, Matt, what about this position? Are we going to sell it here? Are we going to hold it? What are we going to do here? And we answer those questions. So, but on the longer term stock, we're talking a lot on options here, which is we really do concentrate on. But it's not the only thing we talk about. We talk about intermediate and long term positions. We talk about the and the reasons behind it. One of the biggest things I truly try to focus on is you saw in that chat room when I give, I'm buying this stock or I'm buying this this option is why I'm buying it. So you can learn. I mean, getting just the idea about, buy the Apple computer June 175 calls. That's great, but why are you buying it? So I can learn something about why you bought it. And why did you take the loss? I mean, geez, I had to take a loss. Why did you take the loss? Well, because of this or that, the other thing. I wanted to take the loss now because I think the loss is going to be worse down the road. And
Right.
so it's really, really try to concentrate on not just being somebody who gives good ideas, but somebody who educates people on what's going on, what's really going on in the marketplace, and on a trading basis, not just what should be going on in the market.
So you basically help people also not just get the trades to make money, but you tell them why you're doing it. So we went over a couple of trades, and that was really interesting there to see that. And then now, besides the trading, the session on Tuesdays, is that educational? I mean, is there a specific format that you have for that, Matt, or is it what the chat members are looking for?
Yeah, it really changes from the week. I mean, week to week. I mean, we started off by doing when things were kind of quiet. But it's just I would go in and we start. For instance, I just did a quick 10-minute tutorial on certain aspect of technical analysis. One week we did head and shoulders, and the technical analysis is much more than just a bunch of lines drawn on a chart. Okay, and I've talked about this in the past. If you've seen any of these webinars, but I mean, if you people just think, oh, it's just a bunch of, you can make them look whatever you want, but they are based on analysis, on fundamentals. I'm sorry. Now, it also tells you where the buyers or sellers are coming in. There's a resistance level. Why is that a resistance level? Because it keeps getting to that level and it stops going up. Why? Because that's where the sellers are. And then finally, if it breaks above that level, that means that finally the sellers have either exhausted themselves or finally said, hey, I'm wrong, I'm not going to sell anymore. One way or the other, the stock's going higher. So it gives you a good idea where the buyers are and where the sellers are. Again, you hit a support level, same thing. That's where the buyers come in. And if suddenly you break that support level, the buyers have suddenly just decided, I'm not going to buy it there anymore. Or maybe they bought everything they can and then there's just nothing left to buy, and the stock's just going to fall out of bed. But more importantly, it is fundamentally based.
Right.
I mean, I've talked about this in the past, where if a company is trying to is really turn things around. I mean, and their earnings are going to, their business is turning back up. Well, it takes time to hire more people and to make more products so your earnings go up. They don't go up automatically. It takes 9 months, 6-9 months or a year for those earnings to really turn around. But the people on Wall Street, the big institutions, they don't wait for the earnings to turn around. They do the research with their army of analysts to find out when things are trading early, so they start buying the stock. And that's where we get the clue. We see, oh my gosh, this thing's starting to break up. Something's going on. We don't know about it. The earnings haven't turned up yet, but something's going on. And so it breaks, and then we can jump on board. So using that technical analysis is fundamentally based. Every single one of the great hedge fund managers who have ever lived, basically, for all practical purposes,
Right.
uses technical analysis. It's helpful. It's not their only tool by any stretch of the imagination, but it's a very important tool, and that's why I use it.
Right. Okay. And that's really interesting there. So you apply all that stuff, and this is Monday to Friday, just because I'm getting a couple of questions on the chat room. The schedule of the chat room is Monday to Friday, 9 to 5 p.m., and the sessions are on Tuesday. Everybody that joins gets a laptop. Next year, when you renew, it will be the same. It will not go up to the original price. Next year, it's going to stay at the same. The original price is $6,000, but we do have 70% off today until midnight. Again, guys, make sure you you use this. But yeah, we've gone over a lot of trades here, setups, a lot of education there as well. And are there a couple things on your mind, Matt, that you want to discuss? Maybe about, I don't know, energy, inflation.
Well, the market right now, I think one of the things that we have to note is that, we've had this really nice rally, and a lot of people are getting all excited, and did get all excited, although today they got a little nervous, and we'll see what happens after that. But if this is I think it's just a bear market rally. And the reason why I think that is a couple fold. Number one, most importantly, is that nothing's changed. I mean, the stock market is back up where it was in January. Okay, here's the let's do the S&P. The S&P 500 index, okay, is back up where the okay, so we're back up to where we were in January. Okay, what has changed since January? Okay, everything's gotten worse, right? I don't want to sound too bearish here, but look at here. We have a stock market that went right back up the February highs, but where we were in mid to late January. What has happened since then? Okay, inflation has gotten worse. We've had, and it's been exacerbated by a new war that didn't exist in January. Okay, we have higher oil prices, higher interest rates. The Fed has become more hawkish, not less hawkish, more hawkish. GDP estimates have come down, not gone up. Supply chain issues have gotten worse because of this whole war. That means inflation is going to stay higher. If you can't get the product, there's a scarcity of the product, the price of the product is going to go up. We also have a shortage of food, a shortage of oil because Russia's not producing that oil. Where the shortage of food is probably not going to affect us directly. We're not going to have shortages here in the US, but they're going to have them in other places in the world. That's going to cause prices to go up. Because guess what? The fertilizer prices have already been paid for, because you can't wait until June to plant. You've got to plant now. So even if fertilizer prices go down, it doesn't matter. You've already bought the fertilizer. The reason why fertilizer prices are up is because the natural gas is very important to making producing fertilizer. So you have this whole situation where all of these headwinds that we were all worried about that caused this sell-off back in January, they're all worse, not better. Okay. Now, what happened in the big bottom? We had a big bottom in March in 2020. We had a big bottom in March of 2009. So maybe this was the big bottom. Okay. Well, first of all, this was only a mild correction. It seemed really scary because some stocks got absolutely creamed. But this is not a major. This is just a mild correction so far. Things have not gotten better. They've gotten worse. It just is. I mean, I'm not calling for the end of the world here. I'm just saying we all know everything I said is really not anything anybody would dispute. I mean, there's definitely inflation is definitely higher. The Fed is definitely more hawkish. Oil prices are definitely higher. The chain supply situation is definitely, supply chain is still worse. Oil prices are higher, et cetera. Those are kind of indisputable. So the fact that the stock market's bouncing back was like, well, we had this bottom and the market rallies back. It's like, well, that's referred to as a bear market rally. There was one guy on CNBC, or it wasn't CNBC, but they were quoting a guy from CNBC. On CNBC, they were quoting a guy who kept saying, if the market rallies retraces 25% of its, or sorry, 50% of its decline, every single time since the Great Depression, the market's rallied, continue to rally, and that's just not true. The market went up, retraced 50% of its rally in 2000, and retraced 70% of its sell-off back in 2007, 2008. And the market didn't keep going higher. It rolled over in a major way. I don't know why these people say these things, but they're paid to be bullish, I guess. But the point is, the situation is where we have nothing new has changed. In 2009, something did change. We had a major change in the marketplace. The Fed had already been providing all sorts of liquidity, but the authorities came in and changed the rule of mark to market. The banks no longer had to mark their portfolio, their holdings mark to market, because every time they did, every time they mark them down lower, they had to sell more things. They had to sell more of those assets to get their ratios in line.
Right,
Okay?
right.
And then
Really quick here, Matt. Just want to give a shout out here to Tuan. Tuan, shout out. Welcome to the Stock Picks Inner Circle chat room. And also we have Brad on the YouTube chat saying that Matt's chat room rocks. Shout out to both you guys. There are your Matt Maylie fans. All right, Matt. Yeah, just want to get in there.
Thanks for joining. And just to finish the thought there, that the situation is that, that's what happened in 2009. Something changed. In 2018, remember, it was actually very beginning of 2019, but the market was getting hit in 2018. And then the Fed pivoted. What did they do? They went from tightening to easing in a major pivot, 180-degree turn. Okay. They're not doing that this time. And they certainly didn't announce that. If anything, since the middle of March, when this rally started, they've done just the opposite. They've gotten slightly more aggressive, which is a lot more aggressive than they were just 3 or 4 months ago, and just even 2 months ago. But they're more aggressive. Okay. So we don't have that good news like we had in 2018 or 2009. And then, of course, in 2020, what happened then? Again, a major change by the Fed, where they didn't shift. They weren't tightening at the time. But what they did is they came in and they added this massive QE program, stimulus program, and all the global central banks were jumped in. This time, we haven't had that big new development. Okay. Everybody just said, oh, the market's oversold and it's going to bounce back. No, it didn't do that the last 3 times. The last 3 times, something happened to allow the market to bounce back. This time, we haven't gotten that. So the chances that today's sell-off is going to turn into something bigger, I think is true. I mean, we had, again, Brainerd, Vice Chairperson Brainerd came out and saying that we're going to tighten shrink their balance sheet more aggressively than people thought. I mean, that's going to cause investors to deleverage. That's not good. And that's what, when leverage gets to real historic levels, that's what causes the problems. I mean, let me just pull it up here. Bang. Oops. Here, sorry about that. We just want to go back to this thing, what we're on my presentation earlier. And I just want to show you one thing. It'll only take me 2 seconds here to pull it up. Believe me, the last time, I apologize. I was having problems pulling up.
No worries. Bradley is saying on the YouTube chat, I subscribed a month ago and absolutely crushed it on the FXI call options he mentioned earlier. That's the thing. Like there are people that just love you fanatically, Matt. Once they get into these, like you literally pay off their mortgage. Like this one guy told me you paid off his student debt with one of those trades. Seriously.
Well, obviously we don't want to go. That's great. And then I wish we could do that every week. And I don't want to get too excited about it, because sometimes people say, oh, promise you this and you're gonna be rich tomorrow. That's that's what believe me, these are the types of things we're looking to do. But at the same time, between those trades, we're trying to still, I mean, gosh, if you can make the one person made today, 230%. I didn't sell I held on to it because I think it's going to go. I think the market's going to go lower tomorrow, and I think I'll make even more. But I'm a little bit more. I have higher risk tolerance than a lot of people, so I don't mind holding on to it. But the point is, I was just talking about my point is that we're looking to make doubles and singles all the time. Then we get the triples and home runs and grand slams. And we're looking for those as well, but we're also getting a lot in between.
So someone was asking me like, oh, like how quick, which is really a question that, it's a really question. It's a question that really is a tough way to answer, but I guess people just ask whatever is on their heads, and just randomly get a question, how quickly do I make my subscription back? Like, like if I don't know how quick you can make this. I don't know how much time you're going to put into the chat room, but Bradley Bohr said on the YouTube chat, and these are just members that are in the chat, I made double the subscription cost on one trade, and I'm assuming that's the FXI trade. So it doesn't take years. This is something that, and he joined last month. So I mean, but it's different for everybody. Some people make a lot of money on a week. Some people on 2 months, on 3 months. So it's a hard question to answer when I get that question, because it will vary from people. But I mean, Bradley Bohr, and these are all real traders. These are not fake accounts like you have on Wall Street Bets or any of these pump and dump chat rooms. These are all verified, real human being, real traders that are trying to make a living, just like you are with this, right, Matt?
Absolutely. And like I said, it's some of these chat rooms, they got 10,000, 20,000 people on it, and you don't know who the hell they are. I mean, it could be some guy at a hedge fund who's pretending to be somebody he's not, and they bought a bunch of stock, and then they want you to run it up higher so they can sell it to everybody, right? So they call pump and dump. They buy a bunch of stock, tell everybody it's short, rumor, spread around some rumor about something, and get all the retail buyers to come in and buy it up, and then they sell it. They take their profit. They don't care what we're not doing that. If I do a trade, you know about it, and you know about when I do it, not after I do it, not 3 hours after I do it, when I do it, and when I get out of it, you know it when I get out of it, and there's none of that monkey business that goes around, at least for mine. And other people come out and who are on the chat. You don't have to tell you what you're doing. A lot of people don't, but they do give ideas and tell you where they got in and got out. Well, that's great. But again, it's just a situation where it's going to depend on the person, and of course depend on the volatility in the marketplace. We could hit a patch in August where we're not doing much, and that's a couple of things that I did want to mention on that. Number one, if there's nothing to do, we're not going to do it. I mean, there is a good chance at some point this August, we'll be sitting around and we might not even do any trade one week. I doubt we'd go a whole week without doing any trades, but that there's a chance of that happening because I'm not forcing it. We're not here again, I'm not a retail broker from the old days. They called churn and burn. It's like, make sure the guy's doing trades so they pay you commission dollars. I don't pay commission dollars. I mean, so it's
yeah, that's why the broker just wants you to trade day in and day out. And again, folks, you don't have to be trading every second of the day. Sometimes it's better to wait for that confirmation, and that's what you're going to learn as retail traders.
And I've said that many times on the chat where I've said, hey, listen, today's going to be a day where I'm just watching. I'm going to watch, especially in the first hour of trading when things are real volatile. It's like, I'm not going to get sucked in because
you're not guessing. You're not guessing, and you're not going to get forced to guess, of course. Right.
And sometimes you miss something. I mean, we miss stuff all the time. You know how many opportunities there are in any given week? Dozens and dozens of opportunities. We're going to miss some, and I don't lose any sleep over that because I've learned over time. It's like if you worry about everyone you missed, you drive yourself crazy. And if you get really mad at yourself for losing money on a trade, don't do this because you're going to lose money on some of your trades. It's just, I don't care who it is. I don't care who the money manager is. Every single one of them, with any honesty, and pretty much they'll all tell you, yeah, I've had some whoppers. They're lost money. So
and I just want to give a quick shout out here. Bird 1983, what's up, man? Welcome to the family there. And I like the bigger the family, the better it feels, Matt, because it's just, let's just be honest here, right? We can't be watching the entire market. We only have 2 sets of eyeballs, right? Or 1 set, whatever. But at the end of the day, when you have a big community, everybody's looking at different things and hey, look at this, hey, look at that, and it creates an added value where everybody that's learning from you is able to help. Hey, Matt, I think I got one of these possible opportunities. I think I have a possible lottery ticket, a possible FXI, a possible Snapchat, right? So that's the value that it's really hard to quantify, but it's really beautiful to have that community because, since we started this last year, Matt, I've seen the progress on people, not just like Bradley. Bradley joined a month ago. He already doubled his money, but, for all the people that have been in the chat room from day one, ever since, because this is something that you've been doing this for 40 years. This is not something that just started, but it's the only place that you actually do calls and puts and options, right?
Right. And like you said earlier, I don't really try to go into these esoteric. I mean, I did a straddle, and I'm going to bore you by going over what a straddle is. It's the buying and selling, buying of both a put and a call that expire on the same day at different prices. Remember, I talked earlier about how what you're doing is you're hoping that you get a huge move. So whatever you make on the winner will make much more money than you lose on the loser. I tend to skew it heavily to the side that I want. So all I do is make up what I lost here. And then if I win, in other words, I'm not trying to win on both sides. I'm trying to stay flat on one, at worst, lose no money, and on the other one, make big money. So that's, but again, and we'll talk about those when and if they come up, but they don't come up very often. There are people who get involved in put spreads, call spreads, and iron condors and things like that. That's not really what I do. I'm a trader, a stock trader, and so I'm on a directional thing. I'm looking for key turning points, individual stocks, ETF, group ETFs, and index ETFs, where we can make money on puts and calls. And they're risky trades. There's no question there's risky trades, but what we're trying to do is not just guess. We're trying to make it, use educational decisions, not even educational, educated guesses. We're making educated decisions, not just wild guesses, because, you make a few of those in a meme stock and you think you're a genius, and then you end up getting burned. So,
yeah. It's like shooting a bazooka with a sniper scope. I love the approach, because ideally, when I started trading options, Matt, that's how I wanted to do it. But obviously, I don't have 40 years on my belt, and there's just no way that I could just buy 40 years of experience out there. The closest thing is the Matt Maylie chat room. But I want to give a shout out here to Miguel Marana in the chat. Shout out, welcome to the family.
Thanks for joining. Great to have you. And again, I really think, we'll see what happens tomorrow, but I think we're about to hit into another period where volatility is going to bounce around. And we've already had, we've had a lot of volatility the last 3 weeks. It's just been to the upside. So there's still been plenty of money to make. But the old days, I say, again, someday, I think it'll be a while from now. Again, Jamie Dimon, the most powerful, not just powerful, but most knowledgeable businessman in the world, because he has worldwide, his businesses are everywhere in the world. And he's saying volatility is going to stay high. That's a good, I think, a good idea. We had Leon Cooperman today on CNBC saying he does think there's a good chance to get a recession. The market's going to come down. Carl Icahn looking for a bear market. Some of these really smart guys. I mean, when you look at the smartest guys in the room, they're the ones you want to pay attention to. And one of the things I've talked about many times, and I've really pushed it back in around Thanksgiving, was that the CEO of Microsoft, Nadella, he sold 2/3 of his holdings of Microsoft, $374 million. The headlines were half. He sold half, and then when the stock went down, went back up, he sold more. It was a total of 2/3, $374 million out of just over 500 million. You don't sell that if you think your stock's going higher. And they said, oh, well, it's tax reasons. That's a bunch of baloney. His stock has averaged 33% gain for the last 12 years. Okay, the worst year was up 9%, and the increased tax that they were going to put in, that they did put in for capital gains tax in the state of Washington, that 9% would have blown that away. There's no way you sell that much unless you're worried that the stock's going to go down. It's going to stay down for a while. And what are you talking about? Listen, I'm not saying there's anything wrong with Microsoft. He's done an unbelievable job. He's a great CEO, but you don't sell that much unless you think, geez, my stock's gotten ahead of itself. And on a valuation basis, it did get it very expensive. And he sees what's going on with the Fed. And I'm just guessing here, but I sees what's going on with the Fed. That's going to create headwinds. Interest rates are going to go up. That's hard for tech stocks. I'm going to take some off the table. And why? And what am I based it on? Again, I've been doing this for 40 years, or almost 40 years. It'll be 40 years in November. I see what happens when the smart money sells. Okay, in this case, it was just a CEO. Okay, it wasn't a founder or anything, but a CEO who sold 2/3 of his holding. Okay, what happened to the owners, to the partners at Goldman Sachs in 1999? They'd been private for 100 years, but they saw the bubble. They said this can't last. So they sold most of their stock, a big chunk of their stock, through an IPO, and they went public, and they kept a bunch of the stock. Okay, why would they do that? They have an unbelievable business. They're making hand over fist, and yet they sold a huge chunk of their stock to the public. Okay, that was 1999. What happened in 2000? Okay, smart money. They saw it coming. They sold at the top. Sam Zell did the same thing. He sold his own privately held real estate company. Sold right at the top of the of the real estate boom, the real estate boom of 2006. I think it was 2005,
Matt, and
2006.
you apply all this stuff, all of your, I mean, all this, it's every single trade, right? So every trade that you
Exactly.
make. Okay. Yeah. Yeah.
That's what we're talking about. It's like when the smart money sells. I mean, the same thing happened with Blackstone, which is the big venture capital, probably the biggest, best known venture capital firm. Not venture capital. I'm sorry, private equity firm. And they had been a private company for 25 years. What did they do in the summer of 2007? They went public. They sold a bunch of they kept some. Each one of the partners kept some shares, but they sold a huge chunk of their shares. Why? Because they saw the top. No, they sold the summer 2007. 3 months later, we had an all-time top, and the market went boom, straight down. Glencore did the same thing. That's a Swiss commodities bank, a Swiss commodities trading firm. They went public in 2011. 2 months later, the commodities market topped out and rolled over and went down for 8 years. Now, of course, we're in the beginning of what I think is a bull market, but they saw what was going on. They saw, hey, I'm cashing out. And again, not that they worried that their company was going to go out of business. Microsoft is not going out of business. Goldman knew when they weren't going out of business. They're just saying this is going to be down. It's going to stay down for a little while. I can use that money to do something else. Down for a little while. I can use that money to do something else. Okay, and then I'll buy some more, and I'll use it for other issues. Now, so these are the types of things that we're talking about. It's not just what theoretical. Microsoft, theoretically, it's a great company with great prospects. It's just expensive. And when the smartest guy in the room with the biggest holding says, I'm going to sell 2/3 of my holdings, he's not selling because he thinks he's going higher. I don't care what anybody else says. If he'd sold $20 million, different story. It's like he has 500 million and he sells 20 million. Maybe he wants to buy a house in Hawaii. I don't, whatever. That's fine. But that's not, again, I'm not saying anything negative. He's a great CEO, and he did not do anything unethical. If we found out a month later that they had been, some sort of an accounting scandal, boy, that would have been a whole different story. Nothing, they did nothing wrong. He did nothing wrong. He just said, hey, I'm not the one who pushed up the stock. I ran a good business, and the stock's kind of got ahead of itself. I'm just going to take some profits. That's all he did, and that's perfectly reasonable for him to do. And let's see. I just want to tell you something here. Hold on, let's see if I can, because it sounds like somebody. Oh, okay. Somebody from Bloomberg is sending me a question. Oh, did you run for equities for the Americas? Okay. I'm not going to be able to answer her question yet. I'll just say this is. Oh, here we are. I'm currently looking for some cheap tech commerce. Okay, I'm just going to respond to her. Sorry, but this, you get quoted all the time in by the media.
She can join. We can send her the link. She can join the call, and we can have a call.
Yeah. Okay, I'll respond when I can. Okay, there we go. So, but you can see here, and again, I don't pretend to be the smartest human being that ever lived, but I have had a certain amount of success, and they wouldn't be calling me and asking me for my opinion. I mean, here's this is how many times I was quoted here. Geez, today I was quoted 5 times on Bloomberg, all these different times, Bloomberg News. These are the ones earlier in the week, or earlier last week. So this is where I've been quoted from whether my morning pieces or the stuff where they call me and talk to me about it. And I had one time where situation, somebody who gets my work every day, Carl Icahn. I mean, I get a call. Person says, hi, how are you? You're Matt Maylie. Yes, you're the guy from Bloomberg TV. I said, well, I was, yeah. And as well, Carl Icahn would like to speak with you. And I thought it was a practical joke, to be honest with you. I had no contact with him in the past. And sure enough, 3 minutes later, the phone rings and said, okay, I've got Mr. Icahn on. We chatted for an hour with he and his son. And we talked about the market. So we now have a business relationship there, which is nice. And I send him my work. These are the types of things that we're trying to.
Yeah, I think it's great, Matt, that you, number one, the transparency that you bring to the chat room, because I think that folks that are very new to trading might not even know, what I'm talking about. But, like you were referring to, right? People that go on the news and, you consider that like trade ideas, when you start and, oh, they're talking about this, it's going up, let me buy it. And then, retail is stuck holding the bag always. So.
Yeah. And that's, I mean, again, I don't want to, again, the people on Bloomberg or CNBC, these places, the journalists are fabulous, and they're asking good questions. But a lot of their guests are, I mean, like I said earlier, these analysts, they're paid to be bullish. That's you ask any one of them, they're going to say, I've got 80% buy recommendations and 15% holds and 1% sells. I mean, it's just what they do. I mean, so it's just better to have a situation where people who can tell you the truth. One thing, I mean, and if the market's going great, I mean, I'll never forget in May of 2009, and there's some people saying it was the greatest suckers rally of all time, and I said, no, this market's going a lot higher. It's going to go for a long time. And of course, that worked out well. But just going back to this one thing, and just because I had it up earlier, and I'll just go really quickly because people might have been wondering what the heck am I talking about. But this is margin debt. This is the amount of leverage in the market. With margin debt, what's when you get a margin call when you have to pay off your you bought something on leverage. Just shows how much leverage. But see, it's not when leverage is going up that's a problem. It's when it rolls back over. And we saw what happened here in 2000. Saw what happened here in 2007. See what happened here in 2018. Again, that was only a 19% correction, not a bear market. And then we're doing the same thing here. This leverage is starting to roll over. That's because the Fed left all that stimulus in the system long, it was emergency level of stimulus long after the emergency had passed. And that it pushed things. And we had this situation, we all knew the stock market was ahead of the underlying fundamentals, but we were okay with it because it's like, oh, we're just doing this. The Fed is doing this in the summer of 2020. Stock market regained basically everything it had lost during the sell-off of the pandemic. It's like, well, wait a minute, the economy hasn't come back that fast. You go, we know that because we know that the Fed's just holding things up now so that that the rest can play catch up. The problem is when the emergency was over, okay, instead of stopping to let things catch up, they just kept adding liquidity. So it caught up a little bit and then it just stayed too far ahead of it. So my point is everybody's talking about whether we're going to have a recession or not. Doesn't matter in my mind. Growth is almost certainly going to slow. And we can go over those reasons why I think that's the case. And I mean, pretty much everybody in the street is already lowering their estimates for GDP growth. But the point is, because even if the economy stayed sideways, the market would have to come down because it pushed too far above those above the fundamentals, and so therefore, because by this whole Fed liquidity. Now the liquidity is coming back down. It's coming out. It has to come back down to the thing. You'd like it to see where the economy keeps growing. We meet somewhere in the middle. But if the economy flattens out, that gives us a little bit more to come down. If we go in recession, it'll be even lower. And and the Fed is doing the right thing. They're not making a mistake. But that I don't want to give them too much credit because really what they're doing the right thing because they made a mistake earlier. They're just fixing the mistake of their own making. So I don't want to give them too much credit. But the point is, if they kept the Fed pedal to the metal and kept the liquidity going, that would have created an even worse bubble, one from like 2020. I'm sorry, like we had in 2000, 1999, 2000. And that kind of bubble, if that burst, that's the end of this. That's the end of the ballgame. Because if you get another bubble that's that big, because right now we have a debt that is, we have $11 trillion of corporate debt, way more than it was back in 2000. There's just too much debt. We have a global debt bubble. Okay, there's too much debt in the system, and we cannot have a bubble that bursts like it did in 2000. As tough as that, it was actually a pretty mild recession. Why? Because the economy was fine. So now that they're letting some gas out of the some air out of the balloon, that's okay. It will slow the economy down a little bit, but the economy is so much better shape than it was for most of the last 12 years that it's okay. Bear markets, recessions, or even slowdowns or deep corrections, they're normal, they're healthy. They're the right thing. They're part of capitalism. They're an important part of capitalism. To think that the Fed will never let that happen again is ridiculous. They shouldn't want, and in my opinion, they know it's going to happen. Just look at the way they've changed their stance now. Now, people are asking, are we going to have a soft landing? They're just like saying, no, we're not going to say a soft landing. We're going to have a safe landing. The president of the Philly Fed said that last week. He's like, we're going to have a safe landing. That's another way of, that's the same thing. Like it's like saying, you set up on a blind date and you ask the person, is the man or woman you set me up with, are they good looking? And you say, well, they're nice. And, nothing wrong, people look like how they look. But my point is, when somebody asks, when you ask a question, are you going to create a soft landing? And they say, well, we're going to create a safe landing. That's kind of the same thing. He's basically saying, no, we're not going to have a safe, we're not going to have a soft landing. And you know something, you know, he can't say that because, you know, it would become a self-fulfilling prophecy. But the thing is, these guys, they're changing their tone purposely because they know that soft landings are all but impossible to engineer. They've only done it once in the last 50 years. And you know, maybe they can pull it off again. But again, with debt levels coming down from where they were, okay, it's going to be very, very difficult to pull off. And you know, it doesn't have to be a recession hard landing, but it's going to kind of bumpy landing that's going to be tough for the markets. But thankfully, we now have the tools in the marketplace for I say we, talking about individuals, rather than that's something that only the institutions had access to in 2000, in 2008, in 2018, 2020, et cetera. Now we have them and we want to be able to take advantage of them. So that's really why you know, we started doing this, and why it's just so important right now. Let me see here. Let me escape here. I'll go back to Bloomberg. But so you know, I'm just going to look at the futures. The futures reopened at 6 o'clock. They're up about 3, so it's no big deal. Bouncing back a little bit. Let's see what happens tomorrow, because today, for the first time in a while, we did not get any kind of bounce. We've only had
Hey, Matt.
Yeah.
Well, here's the thing. We're looking at futures here. Let's just do something here for the folks. I don't know how far you can go there on that, Bloomberg, but maybe you can just go over a little bit how you use the futures, how you look at them. And because, again, guys, you don't have to learn all this stuff. Matt is a market strategist, so he's looking at global markets. He's not just looking at the U.S. markets. That's just, you know, one of the segments that he's looking at, right? He's looking at all the international markets because they do impact prices of stocks and sectors in the US. You don't have to learn this, but this is really, we're just showing you really what Matt does as an equity strategist at Miller Tabak.
Yeah, I mean, these are the, I mean, you know, you can here are the futures going back. This is the S&P futures. And of course, they trade overnight. And so we're constantly trying to look at what happens. I mean, you know, I remember the night, it was at 2 o'clock in the morning. I was watching the returns from the 2016 election. It looked like Trump was going to win, and the futures were down a gazillion points. And again, there was a 2016, and some really big institutions were able to go in and buy the futures because they have big accounts and they can trade those things at any time of day. For individuals trying to buy a futures contract, that's dicey. You can't buy the options. But now we have the opportunity to buy. So you can buy an ETF, and when the market's oversold like that. But you know what I try to do here. Again, I'm looking here are the futures over the last few days. But let me just I'm going to look at the index overall. But this is what we try to do. And again, teaching people on what's going on. Let me hear. Here's the S&P 500, simple S&P 500 index. Okay. Now let's get rid of that. Get rid of that. Okay. Here's the 50-day moving average. It crossed below the 200-day moving average. Death cross, as they refer to that too. It's getting oversold overbought now. It's not as overbought as it was back in November, but it's getting had gotten overbought. Now look at this one here. Index MACD. Okay, now look at this. It's starting to curl over. Okay, and what the heck are you showing us, Matt? It's just a bunch of lines. Okay, you know, you told us that it's based on fundamentals, but it just looks like a bunch of lines to me. Well, let's clean up this thing so it's a little bit easier to read. I'm going to put the whoops. Okay. That there's the 200-day moving average, that purple line. But what we do here is this is a MACD, what's called a MACD chart. And what that does, you know, I mentioned, you know, you have the golden cross when the 50-day moving average crosses above the 200-day moving average. That's bullish. A death cross is when the 50-day moving average crosses below the 200-day moving average. That's a death cross. Here it's kind of similar, but it's more short term. We're using the 9-day and 12-day moving averages, actually the exponential moving averages, but since it's short term, it really doesn't make a big difference. But you can see what happens here. It's when the shorter term a moving average crosses the longer term moving average, it shows that momentum is shifted. Okay, and when it crosses to the downside, and when it shows that momentum is shifted down, of course, when it crosses the upside, it means it shifts up. Now, you can see here, sometimes you get a bunch of false readings where it doesn't really change much, okay? And nothing really happened. The market just kept on rallying nicely. But when you get the bigger moves, see how it saw a negative cross? It became more prominent than this little thing here. And sure enough, the market sold off. Then it got a positive cross, market rallied. Negative cross, sell off. Positive cross, rally. Negative cross, sell off. Okay, looks like we might be rolling over on another cross, negative cross. This has got me very, very concerned. Okay, that's why if we break down a little bit more, if we go into this week, I'm going to be very worried that this is just a bear market rally. Let's look at the KBE, which is the bank ETF. Okay, I love the banks for a long time. I loved them last year. I loved them at different times. We traded in and out of them, but I turned really bullish on them in the summer. They had a great run, but I've become much more concerned now, and I'll show you why. Again, this is what we talk about in the chat room. Oops, I'm going to do it. Hold on. I was going to do it on the closing basis, so it gives it a little less. Oops, what happened? Okay, 2020. Okay, now I'm just going to add a little something. I'm going to add that. Remember, we talked about the MACD, so let's put the MACD chart in there. Okay, now look at this. We don't need to go back that far. I'm going to zoom it in so you can see it a little bit better. Okay, now this is what we call a descending triangle pattern. Boom. See that? Let me get here. See, oops, shoot. Okay, let me just get rid of it and I'll do it here again. It'll take me a second. But you see how it's a triangle pattern. It's a fairly, again, I don't get, when I do talk about technical analysis, we talk about a couple different patterns, but I don't, some people try to make it a lot more complicated than they need to. But see how we're breaking below that pattern. Again, if you get a slight break, whenever anybody says you get a slight break of any kind of support level, whether it be a pattern, head and shoulders, a neckline of a head and shoulders, or a triangle pattern, or a moving average, if it's a mild break, that's not enough. We need a meaningful break, 2% or more. Some technicians like to see it at least 3%. This isn't quite enough yet. You can see that was only a minor break, and then it bounced right back. This one's a little bit bigger, but it's getting there, okay? This is showing us breaking down. But the other thing, again, remember what I talked about with the MACD chart, right? Negative cross there, got clobbered. Negative cross there, got clobbered. We just made another negative cross. This is not good. And each one of these crosses happened at a lower level. Okay, that's one of the big things in technical analysis. When you see a stock or anything else make lower highs and lower lows, that's negative.
Hey, Matt, really quick here. Got to give a shout out. Meecham 101. Welcome to the family, man. Welcome to the family.
Well, great. It's kind of great to have you here. And so this is what, again, these are the things that we talk about. Again, here is, lower lows and lower highs are bad. Higher lows and higher highs are very good. This is something with lower lows, 2 lower lows in a row. This is a big a big warning signal. And people are saying, what are you talking about? Higher interest rates are going higher. That's good for banks. That's not, they make the yield curve, okay? They ride the curve. It's not, the reason why people say that their banks do well when interest rates are high, because when long-term interest rates are going up, that usually means the yield curve is steepening. In this case, it's not. It's doing the opposite, okay? Because the shorter term rates are rising faster than longer term rates. So the yield curve is actually flattening. And I went and heard yesterday, and that's where the banks make their money. They loan out at this price, so they take in money at the high interest rate. They give out money at the low interest rate, the short-term interest rate, because that's what they give their depositors. They give the short-term rate to their depositors. They take in the long-term rate from the people who get loans, and they make the difference. So if that spread narrows down and becomes flat, they don't make as much. When it becomes wide, they make much. They make a lot more. That's why the banks are having problems right now. And this is what we try to look at.
The education is amazing here on your end, Matt, because here's the thing, man. Like, obviously, everybody's at different levels when it comes to where they are.
I have to plug in my thing before I lose my juice. Sorry.
Yeah, important, super important. But yeah, there's different traders at different levels where they are. Some people are more advanced, others, so you have a mixed bag there. But Like for example, Bradley Bohr on the chat is saying, I started with a great understanding of the markets, but kept getting burned on options the last year prior to joining. Now I actually understand how options work, and really that's how people kind of want to use them, Matt. Like they want to make as much money as they can. They don't want to be doing spreads. Like people that get into options, they don't get in there like, oh man, I can't wait to do some butterflies, or none of that. They just, you really want those massive gains, and the opportunities are there, right? Like you said, the financial instruments are available now, and if you combine that with the right strategy and experience that you have both, you will get a good result. So it's something that I'm really glad to see that Bradley Bohr has done so much improvement. And Bradley Bohr is one of the many, like I said, some people even called me that they paid off their mortgage and stuff. But um, the thing, Matt, is that I really see that you care to help people, to help them, in a sense, empower them financially, economically, right? You're helping them stay afloat and beat not only beat inflation, but be able to make money in this market when the majority of people are just either sitting on the sidelines or they are losing money. And in this case, you're actually making money, even though the market has been in a correction for like 4 months or something,
Right.
right?
And that's it. When we go through these periods of time, I mean, I had a guy he's retired. He worked at um, uh, 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 um, sorry, not Alliance, but Bernstein, and he been a money manager there, a money manager there for a long, long time on the fixed income side. And he's but I continue to send him my work because he's a good guy, and he'd been a customer of mine for a long time, and he said, he says, when the markets are going up, I I don't really need people to tell me what's what's going on. It's when the markets are bound are down. I need people to be honest with me, and he really appreciates that's what I do, and then a lot of people again they. There was just a situation. I'll give you two examples where, well, I'll give just one quick one where somebody it called me about a job, and they wanted to recruit me or whatever, and they said, well, you really don't want to be. It was for a big money manager, and they said you're actually not going to be a strategist. Your whole idea, your whole job is going to be able to make sure people don't sell when the market goes down. And I'm like, and I was like, oh, I mean, they can move it around. Move it around and hold. I said that's not my. I mean, I'm about telling the truth, and again, it's I don't want to say it's unethical because if you work for a Chevrolet dealership and you're selling cars and you think the Porsche is better, well, you're still trying to sell the car, the Chevrolet, because that's your job. And it's like I think people are honest about it. They're just saying, hey, this is going to be a tougher time. I'm telling you, well, it's going to be tougher than they're even saying, and we want to be able to take advantage of it. That's what I'm trying to do anyway. And this is a particularly good time for this. Last year was much easier year. We had meme stocks and things. Everything was straight up. Now's the time. The thing is, if this is going to be tougher, but I think the people who educate themselves and have the time and the inclination to be an active trader, they can really make some real nice returns and again, like I said earlier, not just weather the storm, but profit from the storm. And what those things don't never let a crisis. What's the old saying? I'll never let a crisis go without taking advantage of it. I forget the thing, but the point is when the people who really make money make it is when other people around them are losing theirs. A lot of people are just quivering in the corner. The ones who can step to the plate at the right time and in the right way and make it. Now, again, the options market is risky. I'm not sitting here saying Rodrigo's saying some people paying off their student loans or whatever. That's great, and that's not what I'm sitting here saying. Hey, we're gonna by the end of the month you're going to be a millionaire. I'm not saying that. What I am saying is that I think I can help you navigate through these real difficult times in a way that will not just help you make money, but educate you on the way the world, the market really works. I mean, we all know. I mean, there's certain things that just they make sense theoretically, but they don't play out in the real world. And I mean, it's just a real easy one to tell you is oil prices. When people always say that, well, if oil prices are going higher, that's negative for airlines because they have to, well, it is negative for airlines right now. Why is that? Because the higher oil prices are due because of supply constraints, not because of demand, okay? Inflation is good because it is good for the economy, it's good for the markets over time as long as it's relatively low and demand driven because people, I mean, people are willing, if it's demand driven, that means the economy is doing well, the people are getting better jobs, they're getting paid more for those better jobs. And so when prices go up, they don't mind because their wages are going up and they can afford it. The problem happens when it's a supply issue, like it was in the 1970s during the OPEC oil embargo, like it is now with this whole, well, again, two things. Number one was because of the supply chain issues due to COVID. Now the supply chain issues due to the war. And then the lack of investment in energy and fossil fuel energy is just, everybody wants green energy. Don't get me wrong, but we overdid it by cutting back on that spending. So now we can't, even if we wanted to, we can't produce it as quickly as we'd like. Now, especially now that Russia has the shortage out of Russia. And so these things are going to be with us for a while. But going back to the thing with the jet fuel, so when it becomes a supply issue, that means people's jobs aren't getting better. They're not able to afford the thing in a better way, and that really hurts them. So supply-driven inflation is not good. That's what we have now. That's what we had in the 1970s. Not only is it not good, it causes a slowdown in growth because people are like, oh my gosh, I have to pay to put food on the table. I've got to pay to be able to drive my car, and I've got to, drive my kids to school and things like that. It's like, I know I'm going to be paying more for that 6 months from now. So instead of going for a week on Cape Cod, we're going to go a 4-day vacation instead of 7-day vacation. It all plays out. It actually has a negative impact. That's what stagflation is. Okay. So, and that's the same thing with oil prices. Everybody says, well, usually, so right now, that is the case. Oil prices are moving up. Demand is, well, it is, we're going to get a pent up demand. It's going to increase right now. But, once we get through halfway through the summer and into the next fall, that demand is going to fall right back down. Business travel is not picking up in a big way. And those higher fuel costs are going to eat into their earnings. It's going to be negative. But usually if it's demand driven, oil goes up because there's oil in just about every industry that goes along. And people are like, more people are flying. So if they raise the price of the airfares, it doesn't matter. Everybody's fine. But when the airfares go up, when people's pay isn't going up, that's not, when the demand is not increasing, that's negative. So that stuff where, all these different rules on Wall Street that make sense theoretically, don't always make sense, number one. And number two, that sometimes it's some devious guys who spread those things so that they can make money while you make the wrong decision.
And for some of the people that are asking me questions that just joined, because we just had a batch of people here just join, Matt, they have a couple of questions. I'll go over this really quick. So the chat room schedule, the live trading chat room with Matt is open Monday to Friday, 9 to 5 p.m. Entries, exits, contract, strike price, everything in detailed. There are sessions on Tuesdays as well, 11:30 a.m. Eastern. Those are recorded if any of the Inner Circle members want the sessions. And yes, everybody that joins today from the link that is posted either on the YouTube thing or the Zoom chat will get a free laptop, right? Even if you're trading crypto or just stocks, yes, this will help you benefit. This will help you benefit greatly because Matt has been doing this for 40 years. Options trading, it's all the same thing for him. He's been doing it for all his life, literally. Good question there. Good question. When can I join? You can join anytime. Price at renewal. The price at renewal will be the same at sign up for today. Will not change. Is there a money back guarantee? Yes, there's a 7-day money back guarantee. And is this good for small accounts? Yes, people with small accounts, this is what you can do with options. Do it this way. And yes, it is mobile user friendly. So yeah, I mean, Matt, it's definitely been it's been great to see all these folks that just kind of step ahead and not just learn, but once they've tripled their money or something like that, it's like they have a different type of love for you. It's like it's like a different type of.
Yeah. And of course, that's all. The whole idea, of course, is to get everybody that this doesn't it pays for itself. That's the whole idea here. Sorry, my screen's freezing up here because I want to take a look at Bitcoin, the chart on Bitcoin here. But
I forgot to mention really quick. By the way, even though this is for options only, you can. Well, Matt does also. I mean, he's great at stocks as well. But you can also now. We just made it recently, thanks to Matt. It is also now a crypto hub where Matt is breaking down Bitcoin and other cryptos and giving you know, things like that, like entry setups that he's looking at Bitcoin. And keep in mind, Bitcoin will start doing options very soon, if not already in some random brokerage out there. But options are coming for Bitcoin. So trust me, Matt will be all over that.
yeah, I follow Bitcoin very, very closely for obvious reasons. It's become so popular. But my screen here is freezing up a little bit on me here. I'm not sure why. But anyway, this ball is going in circles here. But you can see here. We'll just look at it here. But see this purple line? That's the 50-day moving average. Okay, and the stock. You can't really see it here. I can't draw it because there's something wrong with my screen. But see how this line was right here. See if I can try one more time. I'll just do that there. But you can see it got up to 45,000 all these different times, but couldn't break above it. It finally broke above it. Okay, so that was bullish. However, it got overbought. See how it got overbought? See the ball there that's turning in circles there, the kind of a beach ball thing? It got overbought. Okay, but it didn't break back down below that line, which is which I like very much so. There we go. Okay, now I might finally be able to make this chart. There we go. Okay. Hold on a second here. I'm just going to see this. Remember I talked about that descending triangle a second ago. This is an ascending triangle. And we have, oops, there we go, there. And then we're going to go. See? We broke above. See, that was an ascending triangle instead of a descending triangle, a flat top, upper line. We broke above it. Okay, it's like, well, why didn't it really break out? Well, it got up to its 200-day moving average and stopped because it was overbought. But I love the fact that even it's just basing here. It doesn't roll right back down into that pattern. Okay, it's holding between that 47 and 45,000 level. It's working off that overbought condition, which I like. Okay, so now that it's worked it off, it doesn't have to come all the way down to oversold. Okay, see how it came down here? It didn't go all the way to oversold. Now, if this thing can break back up and break above that 200-day moving average, which you can see has been very tough resistance for the last week or so. See that 50-day, 200-day moving average? You break above that, this thing's going to catapult higher. If it falls back down into that thing, it's going to be disappointing. It's not going to be the end of the world. It's going to be disappointing. But look for that level. Right now, the 200-day moving average is 48,275. 273 to be exact, but let's just say 48,300. Because remember, we always want to be a little bit more. You don't just want a slight break. I think that's above 48,300. That's going to be a very, very bullish sign for Bitcoin. So look for that level. You put that an alert on your system. That's going to be one that's going to tell you that it's going to see another leg higher. Because sometimes you get pullbacks, like a nice rally, pullback, nice rally, pullback. This time, a nice sideways pattern. It's digesting this overbought condition and in a much more sideways. That's bullish. The buyers are not as afraid as they were back then. We'll have to see what happens.
Right.
We got to wait. But again, if we get above that, that's going to give you a lot more confidence to the upside.
So quick question here, Matt. I know, well, we remember we were talking about this company just so everybody knows, like, even though we're talking about, kind of large cap stocks, we also dive into smaller cap stocks. I brought Mullen Technologies here with Matt and with the members that came to the session, because all the members come to this, and if you're not, you should, because we're giving out picks and stuff. But basically, we talked about Mullen Technologies. I got in when it was like 99 cents. I got out for like almost like 100% on that. But you can see what happened later in the chart. And this was a stock that, you can kind of go over the story, Matt, because you did a little bit of search on this. But Matt reviewed this stock live with us here, and the rest is history. Go ahead, show him the chart, Matt.
Well, see, you can see here what happened. I'm going to take some of these moving averages away, and I'll put them back up in a minute. But let's just get rid of them for a second. Okay, see, okay, got those lines out of it. But here, this thing got ridiculously oversold. Remember, we talked about the RSI. If it gets below 30, this RSI got down to here. I mean, it's got down below 12, below 20. It's down near 15. I was like, this thing is a screaming buy. And so it shot up. And like I said, the stock was trading at, below $1. It shot up to 2. That's where people made like double their money. It came back down. And then it had another resurgence. And what did we do there? Again, in the chat room, boom, 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 boom. Hopefully this will come up. I've been on it so long, I'm starting to lose my, starting to freeze up on me a little bit, but here we go. Okay, boom. This is, remember that MACD chart. See, it rallied and it got a positive cross. Then it broke above its 50-day moving average and shot up. Get rid of those two here. So now what are we looking at? So here's, again, these people in the chat room made some real nice money in this thing on the way up. They made some the other day. I definitely did not. I did not get involved with this one here. But see that you say, well, geez, that's just a small little gain. On a percentage basis, I mean, that's that's 50% in just a couple of days. That's in the stock. Forget about the options. Okay. Now, what are we looking at now? Well, I'm looking at it. It's like it's lost its momentum a little bit. Let's zoom in a little bit so you can see it better. It's lost its momentum again. I'm getting worried. Okay, here's a little bit of a lower high. What's going to happen next? Are we going to get a lower low? What I'm going to do when it gets down there, it's 50-day moving average, because it's provided very, very good support, is I'll want to get in this stock when it gets down near that 50-day moving average, and I'll use a stop out level with the 50-day. If it breaks below that 50, it's going down big time. But that, again, this is using good risk management. It gets down to $2.10, and the 50-day moving average is $2. Well, it gets down to much below $2. I may lose 10 or 15 cents, but that's okay. That'll tell me get out of Dodge. Okay, and I'm not going to buy it up here at 273. I'm going to buy it if and when it gets down here. Okay, and of course, if it sees a negative cross on its MACD chart and it's breaking its thing, I'm going to look to buy some put options. So, and again, this is only a $2 stock, but it does have options. It does trade. They do trade pretty well, and you can see the open interest. See 5,010. They trade very, very well. The spreads are a little wide, so you got to be a little careful there. But you can really benefit on these things. So we do look at small caps there. And again, now we Rodrigo referred to this earlier. I do want to say there's sometimes I was like, no, don't look at these. This you like this stock, it looks great, but the options are really illiquid. So great, you can buy 10 contracts, and the thing may double. But when you turn around to sell it, it's so illiquid that you're going to sell it right back down and lose money by the time you can actually sell all the options. So I just say, stay away from it. Sometimes that's just the right thing to do. In this case, here's a 50-cent spread. That's a big wide spread. I don't want to pay way up that much on a percentage basis. That's a huge percent. So I would suggest putting a bid in the middle of the market. So maybe instead of trying to buy it at 180 on the offered side, I'd buy it at 145 or 150 or whatever level would, again, it would depend on the stock and the situation. So these are the things we can play in because
there's volume there, right? There's volume on those.
Oh, exactly. That's my point. Is that
it wasn't there when I got in at 99 cents. You can imagine why I didn't want to. Like when I see something at a penny range, I'm not even looking at the options. I just go ahead and buy the stock. Right. But there really wasn't. So this is and this is why I like this, Matt, because you do your 40 years of experience of trading. And being a market equity strategist, you'll analyze the op chains for us, for all the members, and you'll determine which are that's why you give these are not random contracts that you throw a dart on the screen. Right. You actually review them and you say, and you go through your analysis, right? And that's what I think is so important as well on this for people that are new. Exactly.
So is that most ones that have wide spreads like this don't have very much volume, and you just need to avoid them. But this one, the wide spreads, look at it, 4,000 contracts, 7,000 contracts today, almost 5,000. The open interest is 12,000. I mean, if you can buy 12,000 contracts, God bless you. But I mean, if you're just going to buy, 10 contracts or a couple of hundred contracts, depending on the price of the thing, these things are plenty liquid. But the bid-ask spread. So again, I'm going to say, don't just pay way up on the offered side because it's a big percentage move. You can buy it in the middle. Just put a bid out there in the middle. I'll bet you get hit. And same thing when you're selling it. Of course, it's funny because if you buy it in the middle, let's say you buy this tomorrow at 150, and it goes to $3, and it's $3 right. Bid, just hit the bid. So You double
All
your
right.
money, just get out. You don't have to be greedy. But
Let
when you're buying it, you can be a little bit more greedy.
Yeah, and I definitely want to give a shout out because I got some manners here, but I want to give a shout out here to Protocol Victor. Welcome to the family. Good to have you here, my brother. But what I also like about the chat room, Matt, is the open discussion. Like, I mean, this whole thing that happened with Twitter, right? With Elon Musk joining the board.
Right.
It's a total game changer having that guy being the largest shareholder. So, now I see Twitter totally different now. I see it as a different, and that impacted this other stock, the DWAC stock.
Right.
It's just been coming down, and things that happen in the market, because this happened in a matter of a day or two, right? And there are people that are likely in this trade, but it's good that you can review these things live as they happen, because you can find trades within, because I now there's people that I know that are short in DWAC and that are a little bit more bullish on Twitter, a little bit more long term. But what are your thoughts on that, and really how could someone in the chat room benefit from having you there when these things happen, super fast?
Well, yesterday the thing came in. The stock opened at 47. I usually, the stock opens, gaps open. That news is usually pretty well priced in. But I just knew they were making too. I mean, I must admit I didn't push it that hard, but I did say, hey, listen, this stock's going higher. As soon before the stock, I said stock open. I don't like gap openings, but this one's one that's going to go higher because Elon Musk is just too much of a market mover for it not to have an impact. And sure enough, people were buying and I did not participate, but others in the chat room did. I mean, I can't participate in every. I'd have 50 trades on at a time. I never could follow them all the time. So, but they made some real nice money. Today we got more upside follow through, but now it's getting overbought. Look at that RSI is above 80. Okay, and you can see the last time it got there, now it held up. So I'm not yet ready to look at buying put options on it, but I'm thinking about it. Now here's again, it's above its 200-day moving average. That's nice. But when a stock, and again, if it wasn't Elon Musk, I'd be saying let's buy puts in this thing, right now. It's first thing in the morning. I mean, the stock is, it's up 40, so 50, whatever. Do the math. It's up 30% in 2 days. But let's look at one other thing here. I'm gonna get it. Again, this ball is just shoot. But and when I'm on this thing for as long as we've been on, my system starts to freeze up a little bit. I apologize because when you're on Bloomberg, it just takes a lot of juice and over time. But because I really want to show this if I can. But you can see how it's gotten incredibly overbought on its relative strength index. And let's see here. Very good. Now I talk about Bollinger Bands, okay? This is another thing we look at. Again, we don't have 8 million things in there because people get too confused. I get rid of some of these lines on the chart here. Let's get rid of this one. Okay, now. Okay. There we go. Okay. Now, what is the bullshit? Remember, the RSI chart is very, very overbought. This is the Bollinger Bands. And what the heck is that? Well, this greenish gray line in the middle, that's the 20-day, not the 200, but the 20-day moving average. The purple line, okay, is 2 standard deviations above that 20-day moving average. And the yellowish green line is 2 standard deviations below that 20-day average. But look what happens here. See when it gets below that line? Nice little rally. Below that line, nice little rally. Okay, got below that line there, nice little rally. When it got above that line, the purple line, 2 standard deviations above it, sold off. Not major sell off. It got slightly above it, big sell off.
Right.
Look how overbought. Look how extended it is. This is incredibly extended on a short term. If it wasn't Elon Musk, I'd be pounding the table saying we got to buy puts in this thing.
Well, that's the thing. He doesn't have anything, because I've been trying to own Elon Musk, anything that, but there's nowhere to get the Neuralink thing. There's nowhere to get the SpaceX or whatever. I don't know, the rocket ship stuff he's doing.
Right.
So this is the only thing besides Tesla that I think you can kind of have a part of Elon, right?
And I think people will, again, it's very extended on its weekly Bollinger Bands, but see how it lasted for a while. So I want to see this week get a little bit higher because everything he touches goes to gold, is gold. Okay, that's great. Everything he touches is gold, except for the fact that as they turn into gold, they also see significant sell-offs. Obviously, like here, and that's just recently. You go back it's had a couple of 2 dozen, 3 dozen. I don't know how many corrections of anywhere from 25 to 70%. His stocks are volatile, so we can still, if this thing keeps pushing higher, when I'm talking about Twitter, and then over the next several days, we'll be looking to buy some. I'll be looking, especially if it can. I really hope it rallies strongly tomorrow and even stronger on Thursday, because then I'll look for a lottery ticket.
Mm-hmm.
We talk about lottery tickets, we talk about ones that are, the options just expire in one day, and so there's a lot of risk. So you don't spend a lot of money, but you can make really big returns. And we'll be looking at this one later this week, especially if it continues to rally, because it's starting to get extended. And even if as Tesla shows, even stocks that he owns can have serious corrections, even though they're going a lot higher over time.
And let's just take a quick look at Affirm there, because we've been covering this one for a while, Matt. I mean, it's a great company, great stuff. I mean, institutions, I'm sure when you talk with your institutional clients, I don't know if they ask you about it, but like Affirm is, the buy now, pay later kind of thing. It's like,
Right.
Yeah. So what's the deal here, Matt?
Well, I mean, the stock, it's it's trying like heck to finally made a higher high after just going, lower high, lower low, lower high, all the way down. Try to make a higher high here. Didn't. Here it goes. I'm a little worried though now, and I'll tell you why. Again, this is more. Bring it in. Okay. Now it's starting to roll over a little bit, and let's look at this MACD chart. Again, this is a momentum player. It looks like it's losing momentum. Is it curled over? It hasn't curled over yet, so there's no negative cross there. But this is what I'm worried about, is that we've had, is beaten up as this stock is, and I like it longer term. But remember what I talked about, it's still a financial name. I mean, it bounced 86%. It looks like a small bounce, but it's up 86%. It's a huge rally. So technically, it's taking a breather now, so maybe that'll be it. However, today we had what's called an outside down day. What the hell is that? Okay, what it is, is that what happens when a stock goes up as much as this one did, you get a stock that trades higher than the previous day's high, lower than the previous day's low, and closes below its previous day's low. And what it is a sign of exhaustion, that this thing's, so many buyers have bought 86% higher, took it 86% higher. The buyers are trying to hold on. Finally, they said, I'm done. I can't, there's just not, again, it doesn't mean that they're dumping the stock, but they're like, I bought enough. There's nobody left to buy the stock. And it's a sign of exhaustion. It's a very near-term thing. So it's not like, oh my God, this stock's going to fall out of bed. But we have a stock that has an outside down day, MACD charts rolling over. I'm not going to be stepping to the plate right now. However, if this thing can gather itself and make a higher high, that which we see, so we got a higher high here. This would give us a higher low and then another higher high. But the jury's out on this one right now, so I'm going to hold off.
Right.
And I'm going to let the market tell me which way this is going to go next.
And I've been trying to see like a couple things in the market. Like I'm looking at growth, I'm looking at value. I'm trying to see if there's some sort of like, kind of relationship. But I'm looking at things like Ford, for example, right? A really deep one, right? And I'm just looking at that drop it's had, and I really like Ford. I think it's a company that it's worth owning, but the question is right now the time to buy? And if it's not, we can still make money on the way down in the chat room. But what are your thoughts overall with Ford? And I know this kind of dips into the semiconductor chat, with I guess would be a good segue into that.
Yeah, we'll definitely talk about that. Yeah, it's great. That's a great segue. But I mean, look at this. It's had a tough run there, but everything had a tough run. And the thing was, it's made a lower high. So this follows it up with a lower low, and that's going to be at the bang. Now, I like the stock longer term, no question. But at 1550, you break below 1550, it's only 30 cents below current levels. That's going to give it another lower low. So it's going to be, oops. I guess so people can see it better. And again, this is the 200-day moving average, but see it sold off, not even much lower high, lower low, kind of lower low, lower high, only slightly lower low, lower high. We follow that with another lower low. That's going to be bad. You can see it's not oversold yet on its RSI chart. So this has got me very concerned. And you know, whether it be the chips or the rare metals that they're splitting off so they can have their own EV division, whatever. That's great. But with all the stuff going on in Russia, it's going to be harder to get some of these rare metals to make these EV cars. So that's got me concerned, especially people are like, hey, I'm comfortable. I'm getting worried about EVs, but so they're kind of pushing towards Tesla, which is the best one. So they're kind of dumping out of some of these stocks. So be careful on this stock here. And we'll just do one more thing, checking the MACD, which I'm guessing, but today's action was particularly disappointing. It really did, because see now again, getting close to a negative cross there, which means it really kind of confirmed that its momentum has changed to the downside. So this is one I'm going to avoid for now. If it can hold this level and bounce, we'll see what happens. But right now, and again, if it was more oversold on its RSI chart, I'd like it better. But it's one way I want to avoid right now.
Yeah, I mean, good take there. And if there is a trade to be made on any of these picks, Matt will be following up in the chat room. So yeah, I mean, all right. So we were talking about some of the car manufacturers there, a little bit about the chips now. You see what's happening with Nvidia, like insane 5-6% drop. I know that there's nothing happening right now with I mean, you know what? Actually, I don't know if there's anything happening deep down in Taiwan with China. Maybe I don't know what they're doing, but I don't know if this is related, Matt, but we were talking about the chip sector possibly taking a hit, as maybe under the assumption, maybe hypothetically, that China would do something in Taiwan and hurt the semiconductor space. But you're seeing the chips take a bigger hit than other sides, but you see, I don't know, you're looking at everything go down. You're looking at some value, but chips went down really hard today overall. Why does someone know something, or
that's the one thing you got to worry about is like the number one is that they went up. They were pretty strong. First of all, like you mentioned, here we are. Here's the SMH. This is the semiconductor ETF. Let me zoom in on it so you can see it a little bit better. But as you mentioned, it had been weak lately, right? So it's going down here, which broke. See its trend. If I put its trend line here, I'm not going to drop it. It made. Okay, here we go. We sold off, made a lower high, lower low, another lower high. We don't know. Is this going to be headed for a lower low? I'm worried about that. So what we got here is it sold off a little bit. Okay, that's fine. It saw a huge run here on a percentage basis. I think it was 30% or something like that. So no big deal. That didn't concern me initially. So yeah, no, oh sorry, 20%. So 20% rally, but 20% rally in just 2 weeks or so is not the word. Is a great rally. So the fact that it's pulling back a little bit that doesn't concern me in a way, except for the fact that it went down several days in a row while the rest of the market kept rallying. So this is concerning me because the semiconductor group is an incredibly important leadership group in the market. Then yesterday, the group saw a nice bounce. Why? Because of Twitter. Because Musk, but it's like, I'm sorry, but Twitter is not going to change the way the semiconductor. That was a bad bounce. So the fact that bounce couldn't hold, it didn't surprise me because it shouldn't have rallied anyway. That was not the kind of news. But for it to break down to a lower low is not good. It's really not good. And again, look at this MACD chart. It's seeing just about to make a negative cross. See what happened here? Remember, we got that nondescript negative cross. It really didn't do anything. It really didn't. It didn't turn out to be nothing. So I want to make sure it becomes a more meaningful one. But when it became a meaningful cross, then the group got hit. We saw what happened here. The group got hit. Saw what happened here. The group got hit. So if this sees a negative cross, especially after another lower high, this is not good for the overall market. What are the reasons behind it? We're not sure. Some people, there's different stories going around. People saying there's suddenly going to be a glut in the marketplace. Other people worried about Taiwan. But either way, it's the biggest thing that's a concern is that suddenly what happened on last week. I'm sorry, on Monday, we had, I'm sorry, take that one back. Late last week, the ISM data came out on Friday, and it showed that the prices paid component of that data was much higher than expected. Again, everybody's worried about inflation. Well, so they knew it was going to be a high number, but it came even higher. So inflation is even stronger than we thought, even bigger problem than we thought. Well, guess what? In that same data, we had the component called new orders, and the new orders went down. Okay, correlation, right? Higher prices, lower orders. You know, people, prices are too high. People aren't going to buy it anymore. That's why the truckers got absolutely smashed late last week, and it continued lower this week. That's why the railroad stocks and the transportation stocks overall. People are suddenly worrying about the inflation is going to have a negative impact on the economy. The semiconductor stocks are highly are economically sensitive, and so it could be simply just concerns over global growth. Now that we all know that the situation in Russia is not going to end. People saying, "Oh, we're going to have a ceasefire." That's great. Maybe we will. God, let's please have a ceasefire. On a humanitarian side, that will save lives. But that's not going to be enough to release those sanctions. Those sanctions are going to be there for a long time. And even if they came with a ceasefire, it's going to be many months. And let's say we painted Putin to a corner. We're saying he can't stay in power. We keep saying that. I was like, well, what's he going to do? Just give up power? This whole inflation issue has been exacerbated, and it's going to be exacerbated over time. We don't hear that the U.S. is not working for a ceasefire anymore. They want to get rid of him. This is going to be a problem. The issue was already a problem. It's going to be a bigger one, and that's what the semiconductor stocks seem to be.
And there's like a hidden. It's like some people say, "Oh, what correction?" and they look at the S&P, but then pull up PayPal. Like, I mean, look at this thing, from the tops. I mean, it's down like 60 something percent. Companies like this, I mean, are some companies just dead, Matt? Like, I mean, even though, do you think I mean, what's going on where these multi-billion-dollar companies just get cut in more than half?
Yeah, there's a difference between being dead and being dead money. IBM has been around forever. It's kind of been dead money. I mean, it's still a very viable company. It's a good company. But they used to be by far the most important technology company in the world for many decades, and now it's not. So it's dead money, but it's not a dead company. And I think PayPal kind of falls in that same, that same kind of category. And the thing we have to, it's important to realize is that, but just because a stock has gone down a lot doesn't mean it's cheap, and doesn't mean it's going to bounce back. And you just get people to say it's come down so much, and therefore it's got to be a buy. Well, you would have said that here. You would have said that here. You would have said that here. Well, maybe it's going to work here. At some point it will. But the point is you really got to be very, very, I guess the biggest thing is you hear these people come out and talk. And again, I don't know where they come with this stuff. It's just this Wall Street stuff that makes sense theoretically, but it's never works that way in the real world. And one of those is that, well, all of these stocks, how many times you heard in the last couple, especially when the market was on its lows a couple of weeks ago, they're saying, hey, 70% of the S&P is below its 200-day moving average. 70% of the, 20% is down more than 20%. 60% of the stocks are down 20%. 20%, 20% of 10% of the stocks. Now all these different, and they said, therefore they're saying, therefore they're trying to say that the correction's already taken place. Apple's been holding up, and Microsoft's been holding up, and Google's been holding up, and et cetera, et cetera. Those are great companies. They're holding up, and so they're saying, don't worry, all these other stocks will come down and they're going to play catch up. That's fine, and it makes so much sense intellectually. Problem is, in real world, it almost never works that way. It's kind of like termites in a house. All right, your termites get into a house, and the frame stays in place for a while, and that's and then you put up support beams like we got from the Federal Reserve, all that QE. But at some point, the termites get into everything, and those support beams, the Apples and the Microsofts, they collapse. Okay, they're forced to collapse because. So I guess that's my point, is that history will tell you when a lot of other stocks get beat up underneath the stock market, underneath the big cap names, the divergence is almost always resolved with the big cap names falling down to the small cap names, not the small cap names catching back up, especially when you don't have the Fed providing all sorts of liquidity to enable that to happen. So this is not a bullish argument. So the fact that PayPal is already down a lot is not and a lot of those other stocks is not a bullish thing. That the bull market is not over, and the bear market is not over. These stocks, of course, are in bear market because they're down. This one's down
Right.
50%. It's not over. It means that the worst is yet to come. And that's what it's saying. So those are take into account when you're looking at these things.
I feel the top was when maybe the Facebook came out with this whole meta BS stuff, like the whole metaverse buying houses for $1 million in a digital world. But look at Matterport, MTTR. This is a company that does like the plans, the blueprints for construction houses, and they were going to be part of that metaverse stuff. And they had a pretty big pop all the way to around $40, and they're at $6 right now. So what is your take on the metaverse? Like, and on the stock, right?
I think it's great long term, but it's like anything else. Too often, especially when there's massive amounts of liquidity in the system, like there were, that some of these ideas get pushed up too far, too fast. I mean, Kathy Woods is such a pioneer and such a great job, but she made the mistake of thinking that her stocks were going up only because they were incredibly innovative, not because they had massive amounts of momentum behind them, because the Fed was providing massive amounts of liquidity. And so were other central banks, and so was the government, for that matter, in terms of fiscal stimulus. But and so these stocks have to come back to earth, just like this one did. Now, in the long run, it's kind of what we saw with the internet. Most of the internet stocks went out of business, but the ones that survived have been unbelievable companies. I mean, Amazon, what an unbelievable company. The internet, they've changed the world. But the stock went down 90%. Now, I'm not saying this one's going to go down 90% before it bottoms, but the way it's going, it's almost there. But I said, Amazon went down 90%, even though its revenues kept increasing, its sales kept increasing, et cetera. The fundamentals were through the roof, but it becomes so ridiculously extended on a valuation basis that it didn't matter that its fundamentals were improving. All right, the stock had to come back down to reality, and that's what these things are doing. I think the metaverse is the ones that pick and choose. And again, this has come down a lot. If it comes back down towards that $6 level, then maybe you pick away at it. I don't, in options trade, that's going to be a lot harder. Even though I certainly know the stock, but I've never looked at their options. Right. No, they trade well, so this is one you can play, and the spreads aren't that wide. So, if this is one you want to play from time to time, but I think on a longer term basis, you're going to want to look for another dip in the market before you really back up the truck.
And I want to give a shout out here to Tiki for just joining. Welcome, Tiki. Welcome to the family. We have Isabella Rubio on the YouTube chat. Shout out. She says, I made double the subscription cost on one trade. So, just goes to show these are all users, some of the Inner Circle members that are here in our session, because of course, right, you don't want to miss Matt. But and so look at UNP, Matt, Union Pacific. It got hit with the railroad stuff.
Yeah.
But nobody even cares about the railroads. Like, nobody talks about the railroads retail wise, right? Yeah, this is more of like a long value.
But it's a good indicator on what's going on in the economy. I mean, I'll tell you, I know some big. This is painful to institutions, because a lot of people were depending on these railroads. They're like, this is such a great hedge, the economy, because we have all these supply chain issues. We're still shipping stuff left and right. Boy, I don't, if the economy slows down a little bit, that's okay, because we're still the stocks just got hit. UMP now, it's still above its trend line going back to last fall, so that's okay. So that's good. Okay, it gets back down here, but again, it's incredible. The railroads are incredibly important to the economy, and when you see the railroads get hit this hard and then not see any kind of a bounce whatsoever, they bounce in intraday right back down today and right back down. So let's I'm just going to look at the RSI chart.
Yeah, so you also use different stocks and different sectors to find trades or hedges, and you give that to the chat members. Like I said, guys, you don't have to learn all this stuff. Matt knows so many things in the market that I mean, trying to explain all that stuff and teach it to you, you might just get the trade from him because he already puts these things to work whenever he gives you a trade setup.
Right. Yeah, this one is going to be, it's probably getting ready for a short-term bounce. So maybe we'll play that with the calls at some point soon. We'll just have to see. It's still not really oversold yet. And I really don't like the way it hasn't been able to bounce at all. And I think any kind of near-term bounce will be short-lived. It's hard to catch that falling knife for just for a day or two. But this is something it is a key change in trend for an economically sensitive area. We got to be very, very careful of that.
Yeah, absolutely. So, and all right, so take a look at eBay. What's going on with eBay, man? Isn't that owned by like another big company? And what is the issue? What is the problem with eBay? Why is it not Amazon? Like why, what's
Well,
wrong?
even Amazon stock hasn't done that well, but this one actually is somewhat encouraging, at least on a technical basis, because you got. I mean, again, it's the fundamental issue is kind of theoretical, so I don't want to put too much onto it. But you think about it, if we're going to have higher inflation, and people will say, well, I'm not going to go to. I'm going to start thinking if I can get something, if I need to get a new table or I want to get something that I don't want to go to a store and buy, that's going to cost me a fortune. Maybe I can get it off of eBay for a decent, price. We'll do more bartering than they will with that. And so look at this start. I want to highlight. Okay, so here we are. We had a nice double bottom. We like double bottoms, right? It got down to 50 a second time, but couldn't knock it down. So that means that it shows that the buyers are coming in there. It's above its trend line. Made a minor higher high, but now we got to see if it can break above that. You see how the $60 level created resistance here for almost a whole month in February. Okay, it's okay. It got overbought on a near-term basis. So now it's digesting those gains. If it can come back down, stay above this trend line and break back above 60, it breaks back above 60, it's gonna run. So, and again, it got overbought. It's making, so this, I'm actually constructive on this thing. And again, on a technical basis and on the theory that people are gonna be, I mean, my whole thing is that with inflation higher, people are going to Walmart. Walmart was strong today. Costco was strong today, even though the market was down. Why? Because inflation's high. That means more people are going to go get their stuff at Walmart. It's just their prices are going to go up too, but there'll be lower prices. And suddenly you're going to have people who never went to Walmart looking for better prices. They're going to go there. So they're going to make it up in volume, even though they'll still, even if their margins contract a little bit because of inflation, they're going to be able to make it up in volume. And at least that's the theory behind it. And I think eBay could take the benefit of that as well. However, I do want to see it break above 60. It breaks above 60. That's a stock you want to own, at least on an intermediate term basis. And Amazon, they got the new CEO. Well, not that new anymore, but Bezos is out. I'm not that worried about it, but the stock has just been dead money for so long. I'm going to show you something here because I'm giving you all these different chart patterns, and believe me, I don't go through a zillion of them every day in the chat room, so I'm not confusing people in a major way. But this is what's called a broadening top pattern, which also referred to as a megaphone pattern. And nobody's worried about the long-term ability of the long-term prospects for Amazon. Okay, they continue to change the world. They're going to continue to change the world. You see the new CEO, he's doing his own things. They've always been willing to do things on a long-term basis and forego short-term or even intermediate-term profits to get where they're going. Now, this is the guy. They make a huge amount of money off their cloud business, and that's what he was running before he became the CEO. He's a very smart guy. So some people trying to throw him under the table. I'm certainly not ready to do that. He's done too well in his other things, but this is what you call a megaphone pattern. Okay, see how it looks like a megaphone? Broadening top is just said, here you say, well, wait a minute, maybe it's going to go all the way back to the top of that. Yeah, it might, but I'm worried that it's going to drop back down because these indicate important tops on a long-term basis. I'll tell you though, if this thing breaks down, if we get a bear market, we get down 20-25% in the S&P, this is going to be the biggest buy because I can't even tell you. So this is a great long-term play. I'm nervous about it right now. I'm staying away from it. And I actually, believe it or not, think Uber is a better play. Just, it's not a better company. There's a difference between good stocks and good companies, and bad stocks and bad companies. Okay, sometimes bad company, if they're not going out of business, if they're just not that good a company, their stocks can be so undervalued that they're going higher. Same thing with a great company, it can be so overvalued that it can't go any higher. It's got to come back down. So that's what I'm looking for here. And even though it doesn't seem to make a lot of sense, Uber right now, again, a break above 60 is going to be positive for that stock. Not Uber, I'm sorry, eBay.
Since you mentioned Uber, I've been giving you guys picks. I'm going to give you guys another one. So ticker symbol is JOBY, Matt.
Oh, okay.
Joby Aviation. I actually got a call from a user. This is like a mother, and her son works at this company, Joby, and this was last year. This person called me when this was like $10. So, but I mean, this is the thing, Matt. This company is like the Uber, but it's like kind of like these airplane things, like Solo, where it's like these little choppers, like little mini helicopters. And they have a partnership with Uber. Uber is actually one of the main investors. And, so this is what you would consider Uber 2.0, right? Where you're getting on a chopper and you're literally flying through the city, port from port, helicopter pad from pad. And this is a new company. I think this was a SPAC. But yeah, that's what I know so far from the company. What are your thoughts on overall on this?
Well, I mean, the stock, first of all, in a certain way, looks good because you see how it got absolutely crushed there for several months. Down about 8%, whatever. But since then, it's acted well. Okay, higher high, higher low. Not a higher high, but the next one was a higher low, and we did get a higher high now. Remember, I talked about that outside day. It had an outside day today, and it's getting close to a negative cross. See, negative MACD cross. See whatever happened the other times? Negative cross there, big sell-off. Negative cross there, big sell-off. However, here, it gave us a head fake. So if this could give us another head fake and it could go right back up, and that would give us another higher low and higher high. That would be very, very good. So we're kind of at a key technical juncture here. I don't like the outside down day. It looks like the buying power is getting exhausted. Let's keep an eye on that MACD chart because if it can bounce back just like it did here, give us a head fake and bounce back, you get above, again, I'm going to do the closing price. Oops, hold on a second. This is the same chart, but it just has just the closing prices, not the intraday. That's not a bar chart. You get above $7, $6.80. This stock is going to fly. I'm sorry, the helicopter company. But anyway, this is going to be really good because it'll give it another higher low, higher high sequence. You get above 680, especially if it gets above $7. It's going to be really good. But again, I'm worried about that MACD chart, so I'm going to stay away from it for right now.
Yeah, interesting one. And what do you think about Ryder, ticker symbol R? I think this is like that transportation company.
Yeah, the Ryder rents trucks, as you see. It's kind of like U-Haul.
This is what you would consider a safe play, right?
Yeah, but look at this stock. Look, it's getting like all these other transportation stocks on the last couple of days. It just got crushed and it made a key lower low. The thing is, it's oversold. So I'm not sure. I mean, look how much it's down just in the last 3 days. Let's see here, 80. Gosh,
Yeah, I mean, maybe this is, and just so you know, guys, like Matt, obviously he's a market strategist. He's always going to be finding opportunities. Again, you are getting equity level research, equity level trade ideas, equity level setups from Matt Maylie, chief market strategist.
Yeah, look at this stock. I'm sorry to say, it looks very dicey. It definitely should be more of a defensive play, but again, this is what's called a head and shoulders pattern. Okay, shoulder, head, shoulder. Here's the neckline, and it's only broken slightly below it, and it is oversold. So if we're going to hold that line and bounce back, we'll be okay. But you get any more, much more weakness here, and this stock is going to get knocked down. And I'm going to mark that one down. So we talk about that in the chat room. H&S. Head and shoulders pattern. Head and shoulders patterns are one of the most compelling ones out there. Only if, I think you have to wait, make sure and confirm that it breaks this pattern. As you can see, it's already below, well below its trend line going back to the pandemic lows. And again, with all this problem with the transportation industry in terms of orders and volumes and things like that, if the economy is going to slow, Ryder's going to have a tough time. So be careful on this stock. The one thing having going for it is it is oversold. So if it can bounce back, but it's got to bounce back immediately. And you got any kind of any downside follow through here. This is when we're going to be looking at the put options in this stock, especially if we get, and I hate buying puts in a stock that's very, very oversold. So what I would do is like, hey, if it bounces back a really shallow bounce back and rolls over again, then I'd really try to buy some put options there. But that's something that we'll be looking at in the next week or two, because it doesn't have to be the sexy names in the world. Viacom, we made several thousand%. That is not a sexy name at all. Doesn't mean it can't see big moves, especially with now that we can trade them in weekly options.
And the thing is that with the weekly options, because here's the thing, a lottery ticket is a lottery ticket because of what it is, a lottery ticket, right? We don't know what can happen with Ryder tomorrow. It could fall 50%, or in 2 weeks. But the only way that you're going to make the insane kind of numbers like the FXI trade or the Viacom trade is if you're properly setting up your trade that way with Matt's setups, right? The contracts that Matt is giving you. If you are to hit that lottery ticket, you're not getting that lottery ticket if you're buying the wrong contracts, okay? The lottery ticket, you got to buy the right type of ticket, pretty much. So yeah. Matt will pick the contract for you and everything.
And just remember, those lottery tickets, again, they're like real lottery tickets. Real lottery tickets usually lose. So you got it. So you don't spend, you don't bet the farm on them, but you can make, especially when it's a really good setup. Like that FXI was such a good setup. It's like, how much lower can this go? And more on the technical side. And how much more lower will the Chinese government let it go? They're not going to let it go any further. So that was one way we could be more aggressive on. Other ones, that just might be, hey, it looks very oversold. It's Apple Computer. I'm sorry, it's it's ridiculously overbought. It's Apple Computer. Even Apple Computer can go down. And so maybe we'll take a flyer. But then you just say, like, I'm just going to, because I'm going to buy a small amount, and it's amount. I could lose half my money. I could lose half my money. I'm not going to worry about it. So again, we have different intensities, and we try to say that when I put on the trades. Hey, this is a big trade. This is something I have a really high. I think it's a really compelling, a high level of confidence. This is when I don't have a high level of confidence. It's one that I don't. I'm probably going to lose money. But if it does go, it's going to make 2,000 times our money. So let's throw $50 on it. Let's throw $100 at it, whatever. And $10 at it, you might be, depending on what it's trading at. But don't do that those too many. Usually you have a good idea, and so that even though it's a lottery ticket with very high risk and low and not a good chance it's going to make money, but at least it's not just, some people just get lucky, and that's nothing wrong. Believe me, we all get lucky every once in a while with some trades, and at least have an educated reason for doing it, not just because geez, it's gone up a lot. It's got to go a lot higher. That's just guessing.
Right. And oh yeah, absolutely. And I agree with you. And you definitely done a lot to help here the retail folks. Let's look at a couple tickers here from the chat, Matt, before you give us some of your remarks. Sure. I think Stella's has a question on Disney. Thoughts on Disney?
Okay. Boy, I talk about it. You know what show? A heat show. It's been a tough one. Just because they just keep stepping in it. What they're doing is right or wrong. They just the way they're presenting it is so wrong. So for a company that's done so many right things over the years, and then you hear about that the CEO or the former CEO Iger is not talking to the current CEO, and it's just not a great situation. But here on the technical basis, let's look at it two different ways. The technical basis, this is another one of those descending triangle patterns. Okay. The stock has been a lousy performer for quite some time. Again, lower highs, lower lows. You can see that right there. This is, this is not a steep one, but you can see if it breaks below 130, that is not going to be good. That's not going to be good at all. I'm going to go back further here. Let's go back a little bit further in time so we can look at it. Now, the one thing though is that their content thing, the battle with Netflix, that's not going well. But boy, the pent-up demand, I just can't imagine these spring breaks. These things, these places are going to be jammed. People are sick and tired of staying at home. That's one thing I worry about, is that people are going to spend a lot of money this spring and maybe early summer, And then we come next fall and they're going to have spent all their money and they're going to worry about inflation and they're going to pull their horns in a major way. But I guess to answer your question is that you see how it's been acting very poorly, lower highs, lower lows. The best it can do is trade sideways during one of the best. I mean, how many stocks went down last year? The stock went down, one of the best years for the stock market ever. Okay. And since then, it's nothing. Lower high, lower low, lower high, lower low, lower high. Looks like we're heading for a lower low. So this is just one that I would want to avoid. And you might even look to make a negative bet on the stock and buy some puts going out a month or so. I want to like it because it's such a great brand for so many years. And I do think we have some pent up demand coming for their theme parks. But the stock's just not doing well until this CEO can give people, especially the institutional investors, more confidence. I just don't see this one moving. It gets moving much higher, and if it breaks below 130, it's gonna get hit hard. And the CEO will probably be looking for another job. But this is a great company. It's going to provide, if it does happen, it's going to provide an unbelievable opportunity to buy the stock at some point down the road, though.
Do you know why they're not talking? Do you know why they're not talking? Iger and the other dude?
Because he just didn't. They got along. Well, obviously, Iger picked him, and but at least going based on the public reports is that he's done everything wrong. This whole thing with the what they were going to say about don't say gay. The thing in Florida was a proposal by in the Florida's legislature, and where they're using these politically correct statements. They handled it very, very poorly, and Iger really didn't like the way it was handled, and neither did the investment community. And from what I can gather, it's like Iger's saying, if you'd done what I told you to do, you wouldn't have this problem. And it's a big PR problem, and it's not what they need right now. And so Iger's going to. I mean, he's. I think he's still technically the CEO, but I'm sorry, the chairman, not the CEO. The CEO is the chairman, but they don't talk anymore, and that's they're going to have some problems. And it's when you have that kind of loss of confidence from a CEO from a company. The last two CEOs have been iconic people and done a great job. That's good. It's just too many other opportunities out there to look to buy than a turnaround here. That said, at some point it's going to be one of those great turnaround stories to buy, but it just doesn't until they get this thing squared away. It's out in the future somewhere.
Okay. All right. Interesting. And then from Luther here, we have Shopify. You already want to? Did you go?
Oh, no, I just glossed over it because it was a great play by. Hold on a second. I'll just push it up. Was that one? Well, I guess maybe it was Spotify was the one. But anyway, here, look at this stock. It's I'm a little worried about. You can see here, that's that yellow line. This is 50-day moving average, and that has been providing some serious resistance. You see how it's been bumping up against it for over a week now. It's worked off its oversold condition, so that's I mean, but it's not overbought, so that's good. Whoops. So let's see. The problem, I like this kind of sideways correction. The stock rallied, 40-50%, and then stalled. That's okay. Nothing wrong with that. Stalled out at the 50-day moving average. That's okay. If you can finally push above that 50-day moving average in any kind of meaningful way, it's going to be bullish. But if it drops below the sideways range, which is right in here at about 675, at about 650, you break below that, then it's going to cause some problems. But again, it's a high price stock. The options are expensive, so you need to be careful. But I do also like that it's trade. You see this trend channel? It was in a trend channel. It's broken above that. We just need that extra push. The sideways move is okay. Broke out of the sideways, downward sloping trend channel. Sideways correction, that's good. If we get above that 50-day moving average, that's going to be really positive. So I would want to hold off until we get the proof that it is going to make it is going to it is going to resolve this sideways correction with an upside breakout.
Right. And all right, we already went over the Tesla one, and let's see, the other one we have here is SE from Luther again.
Okay, C limit. Here's another stock that I want to like. I mean, obviously it's gotten the, what kicked out of it. But here you get, I'm going to see what do they pay for doing. Hold on a second. I just want to look at some of their value, okay, so they're not making it, still not making money. That's a no dividend. So that's a concern. It's a stock that a lot of people really like. I was just seeing if it did. I thought for some reason I thought they were already making money. But what I do like again is that it's broke. It's based. It made a base here, oversold condition, and let's get rid of these moving averages so you can see what the heck's going on. Take one more second. Take a second. Let's see how that's broken up above that. As you can see, it's a trend channel, but it's above that trend line going back to November. We'd like to see it move above 50 to give it a nice higher high, but it's kind of a no man's land right now. It's a company that a lot of people have a lot of faith in, or had a lot of faith in, I should say, until it got beaten up. I'm still kind of in the show me stage. I have to look at another thing here. Hold on. Yeah, nice positive crosshair. The 50-day moving average it's just, it's had a nice run. It's just kind of a no man's land. We got it. I mean, I'm going to be a lot more confident above this stock if it gets above 150. So I guess my point is, if you want to buy it here, fine. I'm not going to play it in the options. You buy it here, fine, and use it. A stop level, 7% below where you buy it, so that you can get out of it. And especially if you see a negative cross in a MACD chart. But the thing is, the sideways move is fine. I just want to see more upside movement to really give it a higher high above that high there in September. I'm sorry, in end of February, to really tell us, confirm that the trend is completely changed. But right now the stock looks it looks good. It looks fine. I'm just not one that, again, there's others that maybe a little bit more I could be more aggressive on.
Right. Interesting take. And well, guys, I mean, we've been literally here for 3 hours, guys. So number one, congratulations if you've made it here so far. That means that you do actually care about being successful in trading, and that's really what matters. If you do want to take it to the next level, I think that you should look at the Stock Picks Inner Circle chat room. We're trading live Monday to Friday with Matt. You've seen all the trades there. You have a 7-day money back guarantee, so you can literally try it, and if you don't like it, you get your money back. And everybody that joins gets a free laptop, right? So I think we covered a great session. I'm going to go over the Stock Picks Inner Circle chat room once we go, well, after your remarks here, Matt. But number one, thank you for your time here. Appreciate you. I know you're a busy guy. So are there any closing remarks here that you have that for why the members should join the chat room, and what you'll be looking forward to with the chat members this coming week?
Yeah, I think again, the key thing is that we're in a very volatile time in the stock market, and in all the markets. I think there's a good chance that we will have a bear market, and definitely, I think, a deeper correction than we've seen so far. And you get some really billionaires out there. You had excuse me, today Leon Cooperman on CNBC saying that, Carl Icahn recently saying he's worried about the recession, or worse, as he says, that Jeffrey Gundlach on the new bond king, who's also good in all different markets. Although he did call this rally that we've seen the last couple of weeks, he does think that it will not last, and he's very very cautious on the market. And you get the smart monies, and you get the CEO of Microsoft selling that much stock. You know that we're going to have a lot more volatility. Jamie Dimon saying we're going to have volatility. When the smart money's telling you that, you need to pay attention. And what we had in 2021 is not going to continue throughout 2022. We're going to continue this volatile times. But thankfully, we have the tools where we can take advantage of it. We can, whether it be the put options, the daily options, the weekly options, the 3 times a week options in the index ETFs, the inverse ETFs that we use, and these are the types of things that can help the individual person not just ride this out, but profit from it. And it's worked out really well for us in the last 6 months or so. A little bit more than 6 months that we've been doing this. And again, when you have the most important businessman in the world saying volatility is going to be with us for a long time, let's I think we should pay attention and move that way. Now, I hope you'll stay on and stay on here for a few more minutes. And Rodrigo can show you exactly how the thing works and how we work our trades. But it's an exciting time. People don't fear it. They'll say don't fear change, embrace it. Don't fear problems. We all know that bear markets are normal and recessions are normal. We may not even get those, but we almost certainly are going to get a deeper correction and more volatility and a slowdown in the economy. So we can be afraid of it, or we can embrace it and take advantage of it. And the guys have Warren Buffett became a billionaire by keeping his head when times are really tough, keeping his head while others around him were losing theirs. He picked up unbelievable opportunities. We're going to be the ones who have the money to do that if and when a deeper sell-off comes. And that's where we're going to really. Warren Buffett's not a trader long term, but he actually is a trader. He is a timer. It's just very long term. He waits until there's blood in the streets. He did put a little money to work recently, but otherwise he's got record levels of cash sitting on hand because he knows the market is expensive and he knows he's going to be able to take advantage of it. We want to be able to do the same thing. To be the contrarians and be the ones who do not end up being the suckers. But anyway, that's really I have it. I hope you'll thanks for those who have joined. We'll see you in the chat tomorrow, and we'll look carefully at the markets. Well, tomorrow could be a big day. We'll see if it really gets knocked down. If it gets knocked down further, it could be a wild week the rest of this week. And then, of course, next week is we start earnings season, and that's when things are really the volatility is going to pick right back up. Well, not that it's really died down, but it's going to pick back up in a big way because individual stocks are going to be going in different directions than the overall market, and we want to be able to capture those as they move.
There you go, guys. Chief Market Strategist at Miller Tabak, Matt Maylie, and of course, lead trader at the Stock Picks Inner Circle chat room. Thank you, Matt, again for your time, and I'll see you in the chat room tomorrow. I know you'll be in there early. So
sounds great. Thanks, Rodrigo. We'll talk to you soon.
All right, Mr. Matt. Thanks a lot, man. And for the folks here, I'm showing you the chat room right now. This is the live chat. All right, so you can see there's two chat rooms for those that joined. There's one that's called Inner Circle Chat. The other one is called Matt's Important Messages. And Matt's Important Messages is a chat room that only Matt can post, right? So this is where you're going to find all the trades, setups, entries, contracts, detailed to the point. Like, for example, I'm going to sell my SQQQ April 1 $32.50 calls, roll them out to next Friday. So you can see pretty much the entries, also some market updates, market commentary. Here's a nice little educational piece on how to look at charts. Again, keep in mind, you are getting commentary from a 40-year veteran, right? Chief market strategist, director of trading at Merrill Lynch. I mean, this is the guy you want on your corner, period. So Matt's Important Messages is where Matt is going to post entries, exits, all the information for the trade. The other one that's called the Inner Circle Chat right there, that's where everybody else is posting. Everybody can post their trade ideas. It's like a community thing. Everybody goes in there, and there's trading things together, right? As a community. And Matt will pitch in there as well sometimes. So again, the sessions are on Tuesdays, 11:30 a.m. Eastern. That is the time, 11:30 a.m. Eastern. So for all you guys that joined, make sure that you pop into that session. It is recorded, so if you do miss it, you can let us know. We can send it to you. This is only going to be available till midnight, correct? Jeff, this is annual, correct? So it's for the year. The renewal price is going to be the same. It's not going to go up to the normal price, 6,000. It's going to stay the same. So everybody that joins as well will get a free laptop. Keep that in mind. If you see a laptop on the checkout, that means that we still have one available, right? And if anybody has issues with the checkout, let me know in the chat. I can try to help you here as much as I can. But yeah, this is the chat room where everything goes down. Entries, exits. This is really the only thing you need. I know a lot of people that have full-time jobs and really all they have is this tab open. Whatever it is that they're doing on their other tab, it doesn't matter. They're doing work stuff, right? And they have their chat room here on the side with the sound notifications on. Okay. I only have Matt's with notifications on. So I'm not showing you all the windows I have here. I have a lot, but like, I always have this one open with the sound notifications. Why? Because I want to know what Matt's doing. Every, yes, every second of the day, I want to know if Matt is buying calls or if he's buying puts. When I haven't been trading for 2-3 days and I'm kind of out of the loop, okay, I go to Matt's chat room, I get up to speed, I read the commentary, the trades, what he's doing, all that stuff. And if I'm working or whatever, I just get the sound notification here with that bell. So everybody that does join here will get access to both chat rooms, the free laptop, and there's a special surprise for everybody that joins. You have to email rodrigo@benzinga.com if you do want it. If you don't want it, it's fine. But it's a special surprise. Everybody that joins today will get it, but you have to make sure that you email rodrigo@benzinga.com. That is your way of knowing, right, that you actually got the prize. Everybody that joins will get it, including the laptop. And we're going to add a couple things there for everybody that joins. But if there's no more questions, guys, I'm going to let the stream here run for a bit. We went over the chat room here. It's pretty simple. I mean, this is all you need to make money, really. You don't need a whole bunch of complicated things. If you want to edit your profile, you just click edit. You can change your name. You can change the picture if you want. And reset password, all that stuff. So you also have a chart on the bottom. Keep that in mind. These are free. You don't have to pay for them. These are high quality charts. And you also have a proprietary Benzinga scanner that is only available to the Inner Circle chat members. Okay. Let me just save this stuff here. Go back to the chat. And just so you know, we're adding more tools. This is not set it and forget it. There's more things that are going to be added here, guaranteed, to this chat room. Now, this proprietary scanner that I told you, it's only available for you guys in the Inner Circle chat room. We made it just for you guys in the chat room. All right. So you can see whatever's happening here, either if you want to go on the gainer side or on the loser side, you can also do that. Some people like to short. So you can actually use this and say, hey, is this something worth looking into? And you have the chat right there with all the community members where you can literally talk it with them and, chop it down with them. It's better to have, a whole bunch of different sets of eyes than just you trying to figure it out on your own. Even if putting everything aside, this is a huge upgrade for anybody that's trading alone, because trading alone is just horrible. I call it vacuum trading. You really fall into like a mind trap. And doing this with a community, trading with a community, it's definitely mentally going to feel different. And you're going to feel the difference. Trading with a community, it's just way better than doing this by yourself, trying to figure it out, because you really are not, you're just, these are just your thoughts and yourself. That's it, right? You're not exposed to other people's opinions on the markets and on pieces of news and how to trade it. And especially if you're new, like don't even, especially if you're new. If you're new, you can't, don't even trade if you're going to do it alone. If you're new, 100%. Find the right community. This is the best community, I think, to get started, because if you want to trade options, all you have to do is buy a call and buy a put. That's the simplest type of trade you can make. There's nothing, I mean, everything from there is more complicated, and everything from there is what we don't do in the chat room. We just buy calls and we buy puts. So I think we covered, quite a lot here, guys. So big shout out for everybody that was here today. Luther, I sent you an email as well. I got your email. If anybody has questions, reach out. And if you do join, make sure that you email rodrigo@benzinga.com, because that way you can claim your free prize for joining. But you have to email. That's the only way to get it. All right, folks. So with that, thank you for being here. I'll see you guys next time. Make sure that you're always popping into the chat room. Guys, no excuses. Even if you have a full-time job, that does not mean that you're just going to sit back and relax, okay? If you want to be successful in trading, and if you want to make money in trading, we are literally opening the doors here at the Stock Picks Inner Circle chat room so that you can come here, learn, trade, surround yourself with like-minded community traders and find that right balance that you need, because it's a career, and it's not a career that's meant for you to try to do it on your by yourself from the bottom up. It's just not that, So we want you guys to be successful. That's why we do this. Again, if you have questions, reach out. Thanks a lot for popping in here. It really was a great session, and we'll see you guys next time. Have a great day and stay safe, folks.
Please leave your message for 407-346-8618. Nothing has been recorded.